the euro is much more than our single currency. For over 2 decades, it has helped bring stability and growth to Europe, embodying our shared values. But in an ever more digital world, our euro needs to evolve. Let's get ready for a digital euro. We will still have our banknotes and coins, but a digital euro would mean more choice at our fingertips, offering the highest privacy standards and making it accessible to everyone across the euro area. A digital euro would also strengthen Europe's autonomy in the digital world, making our payments sector more resilient. It could become a reality. Let's embrace the digital era with a digital euro.
Dear colleagues, distinguished guests, ladies and gentlemen, here in the room and digitally watching the live stream, welcome to Tallinn. It's a great honor to welcome you all to the Baltic Digital Euro Conference, Payments and Policy in the Changing Environment, organized together by Eesti Pank, Latvijas Banka and Lietuvos bankas. We are privileged to be joined by such a distinguished audience and high-level speakers, whose insights will guide us through the opportunities and challenges ahead. The expertise and vision will set the tone for our discussions and inspire us to think about the future. My name is Rainer Olt, and I will be the moderator of the day. But not only, as I'm responsible for the payments, catalyst, operator, and oversight functions at the Eesti Pank, I will join one panel later today. But now a little bit housekeeping. The agenda and the bios of our distinguished speakers are available online. Please use the QR code on the screen. Throughout the conference, we will take questions from the room only. And when asking questions, please also identify yourself. Microphones will be distributed in the room. On the tables, many of you already found leaflets explaining digital euro. I recommend you to take one because then you have it also on paper, so it's available offline. Without further ado, let us begin. And for the opening speech, let us warmly welcome on stage our host today, the Governor of Eesti Pank, Mr. Madis Müller.
Thank you very much, Rainer. Dear colleagues, distinguished guests, ladies and gentlemen. It is my real pleasure to welcome you today in Tallinn, and in particular here in the Independence Hall of Eesti Pank. This hall has deep historical meaning for Estonia, making it a symbolic and inspiring place to discuss the future of money in Europe. Just as independence gave us freedom and responsibility to shape our own path, digital euro will give us the opportunity to shape Europe's financial future and the digital legal tender as a symbol of unity and resilience. Digital euro is not just about technology. It's about trust, usability, and integration across Europe. As Europe navigates a rapidly changing global economy, digital euro can strengthen our strategic autonomy while providing people and businesses with a modern and reliable payment solution. Meeting here in the Baltics, a region known for digital innovation, reminds us that practical solutions and real-life adoption matter as much as policies and technology. Today, we will explore where the project stands, the challenges ahead, and how digital euro can bring tangible benefits to Europeans. Cooperation will be key. Central banks, regulators, businesses, and payment service providers all have a role to play. Payment service providers will be important, bringing digital euro to life for consumers and merchants. Their work ensures that people can use it safely, conveniently, and reliably in their everyday life across Europe. Ladies and gentlemen, digital euro is also a real European project. Its success depends not only on political determination and technical competence, but also on people's trust and their conviction that it will make their lives simpler and safer. Listening to people and businesses is equally important. Surveys and consultations across Europe, including here in the Baltics, show interest, but also questions from the public. This feedback should guide our work, ensuring that the digital euro will be a practical, user-friendly, and also a meaningful payment solution. This conference is our opportunity to exchange ideas openly, test assumptions, and build a shared understanding of the road ahead. I encourage everyone to participate actively, whether you come from the public sector, a commercial bank, a fintech company, or academia. Together we can take another important step towards a digital euro that works for Europe. Thank you all for being in Tallinn. I'm looking forward to a lively and constructive discussion today.
Thank you, Madis. Thank you, Madis. Indeed, our agenda provides all of us the opportunity to learn and discuss about digital euro from different perspectives, and today's agenda is ambitious, but it indeed reflects the urgency and importance of the issues we face. Our day will start with more high-level policy aspects and then continue throughout the day into more practical implementation questions and issues and opportunities. Next, let us start with the first session then. The policy keynote speeches followed by a fireside chat, giving all of you in the Independence Hall the opportunity to engage. So now, let us welcome on stage for the first opening policy keynote, the European Commissioner for Economy and Productivity, Mr. Valdis Dombrovskis.
Honorable Mr. Governor, Excellencies, ladies and gentlemen. Good morning, everyone. Tere hommikust. It is always a pleasure to return to beautiful Tallinn on the shores of the Baltic Sea, which in recent years has become somewhat of a NATO lake. I am very pleased to participate in this forum, which gathers the views and insights of such distinguished speakers on such an important priority. Each of the Baltic states has undergone a dramatic economic transformation over the course of the last 2 decades. Membership in the EU and NATO, along with joining the euro area, has clearly provided stability, security, and opportunities needed for our economies to finally realize their full potential. This strong performance also endorses the Baltic states' embrace of innovative technologies. And nowhere is this commitment more evident than in Estonia, which has earned a reputation of the world's most advanced digital society. So it's particularly appropriate that we meet in Tallinn to discuss the opportunities that the digital euro presents. Today, I would like to focus my remarks on how the digital euro can improve Europe's strategic autonomy and enhance our preparedness to respond to emerging threats. But first, allow me to begin by providing a broader context for the need to introduce the digital euro. Technology continues to evolve at a breathtaking rate, transforming the way we live, work, and interact with each other. And we must continuously adapt to keep up. This also includes how we use our currency. Today, more and more Europeans are choosing to pay digitally. The share of cash payments in the euro area between 2019 and 2024 has dropped from 72% to 52% at point of sale. In fact, Estonia ranks among euro area countries with the lowest share of cash payments at the point of sale and the highest number of card payments per capita. The digital euro is designed to respond to the challenges and opportunities presented by this transition. Actually, Europe did not reap the full benefits of the digital revolution brought about by the internet. We are still paying a price for this, with a productivity gap between the EU and US today being largely explained by the tech sector. The digital euro presents another important opportunity to embrace technology that will protect, facilitate, and drive future economic growth. Turning now to the digital euro's role in improving Europe's strategic autonomy. In a more fragmented world where transactional diplomacy is increasingly replacing multilateralism, the EU must become a stronger global actor. This means reducing dependencies that might impede us from pursuing strategic policies in line with our own interests and values. Today, the space left behind by the declining cash use is being largely covered by non-EU payment solutions. In fact, international card schemes are dominating the European retail payments infrastructure, with 13 euro area countries relying entirely on international card schemes for card transactions. And Estonia is among those countries where international schemes fully dominate the payment card market. This strong dependence of the European retail payments landscape on foreign players represents a weakness in terms of our strategic autonomy. Ceding technological control over to the EU's economy entirely to others impedes Europe's ability to act autonomously on the world stage. It leaves European payment systems vulnerable to threats to withdraw or changes to the services provided by these international providers. It risks relegating Europe to the position of policy taker instead of policy maker. The digital euro can help counter these risks by ensuring that the euro area retains control over its financial and payments infrastructure. It can instantly provide a pan-euro area means of payment and also support European private initiatives scaling up across the euro area. The digital euro would also benefit merchants who would pay transparent, lower fees for accepting digital payments. It can be an important pillar by strengthening EU strategic autonomy by increasing the euro's resilience vis-à-vis other currencies, payment systems, and stable coins not denominated in euro. So there is a great and growing strategic importance to the digital euro project in view of quickly changing and challenging geopolitical landscape in which Europe has to find itself. Introducing the digital euro is a statement of our determination to ensure that Europe will decide its own destiny in this increasingly fragmented world. Secondly, with regard to preparedness. Here, from the Baltic states, we can see very clear that Europe faces a new reality marked by growing threats and deep uncertainty. Since Russia began its full-scale invasion in Ukraine, we have seen a fresh wave of sabotage, foreign information manipulation and interference, electronic warfare, and hybrid and cyber attacks. Almost every day now we see efforts to test, probe, and provoke by violating the Union's airspace, including here in Estonia. The Baltic states have been consistent in warning their partners against the risks posed by Russia and the Kremlin regime, but not everyone sees the danger. In this context, policymakers at every level have a responsibility to take all possible steps to reduce our vulnerability to disruptions and attacks. This is why earlier this year the European Commission came forward with a preparedness strategy, our action plan to effectively respond to emerging threats. The rapid digitalization of our societies also comes with increased exposure to cyber risks. And European payment systems are not immune to these threats. By providing a digital means of payment built on European infrastructure and standards, the digital euro reduces the dependence of our payments landscape to third country providers. The Commission's proposal also contributes to preparedness by ensuring the digital euro's offline functionality, enabling payments to take place even amidst connectivity outage situations. Digital euro transactions will be also protected by the Digital Operational Resilience Act, which ensures that financial institutions operating in Europe can withstand, respond to, and recover from ICT disruptions such as cyber attacks or system failures. The digital euro can therefore play an important role in reducing vulnerabilities and enhancing our preparedness by improving the resilience of our payment systems. It is important to note here that digital euro will complement and not replace cash. A sign of European Commission's determination to safeguard the right to pay in euro cash and have easy access to cash, the Commission proposed a regulation on the legal tender of euro cash alongside with our digital euro proposal. Allow me now to provide a brief update on where we are in the legislative process to make digital euro a reality. The European Commission tabled its legislative proposal for digital euro already 2 years ago. Since then, we had seen slow but steady progress. Today, discussions remain ongoing in the Council and the European Parliament. It is normal for negotiations on such a complex and consequential proposal to take time. However, given the challenges I already mentioned, there is now a growing urgency to reach political agreement and to address remaining open issues. That's why I welcome the Danish presidency's ambition to reach a common approach in the Council by the end of the year. The time to act is now to give both the ECB and the private sector the legal certainty needed to start preparing for the digital euro. And such legal certainty can only be achieved by the adaptation of the regulation. To conclude, ladies and gentlemen, our currency must continue to evolve alongside the geopolitical and technological shifts reshaping our world. The euro has become a mark of Europe's economic strength and a symbol of Europe in the world. In 2026, the euro area will welcome its 21st member, Bulgaria. The currencies that will power the prosperity of 21 euro area countries must now fully embrace the technologies of the 21st century. The digital euro is not just an innovation. It is imperative to promote our strategic autonomy, improve the resilience of Europe's retail payments, and harness the opportunities of the digital age. Thank you once again for this invitation to speak here in Tallinn, as Tony's drive in digital policies will be instrumental and progressing this file towards the successful outcome is key. Thank you very much, and I look forward for today's discussions.
Thank you, Mr. Dombrovskis. Very inspiring. Now let us continue with the second policy keynote and welcome on stage member of the Executive Board of the European Central Bank and the chair of the Digital Euro High-Level Task Force in the Eurosystem, Mr. Piero Cipollone, please.
Dear Governor, dear Commissioner, dear all. It is a pleasure to be here in Tallinn and to speak at this conference. I often think of the ECB role as the guardian of the euro. And the euro is more than just a currency. It is a commitment to stability, to unity, and to a shared European destiny. A destiny built on peace and prosperity. Yet, as we look at Europe's borders, not too far from here, the challenges to peace and prosperity are all too visible. At the ECB, our aim is clear: to uphold Europe's economic and financial stability in a world that never stands still. Today is an opportunity to discuss one vital element in our ongoing efforts to deliver stability. That is, ensuring that central bank money, our sovereign money, which Europeans use every day in the form of cash, remains universally accessible for everyday transactions. To achieve this, cash needs to be available not just in physical form, but also digitally. As a legal tender, a digital euro could be used whenever digital payments are accepted. It would preserve our freedom to choose how we pay. In my speech today, I would like to focus on how the digital euro will bolster Europe's unity, safeguard our autonomy, and strengthen our resilience in the face of ever-evolving challenges. Commissioner has already touched upon many of these issues, but this to tell you that we think alike on this theme. So let me start with the digital euro contribution to European unity. When the Baltic states joined the euro area, it was not just an economic decision. Sharing a single currency also has a strong geopolitical dimension. My predecessor at the ECB Executive Board, Fabio Panetta, once remarked that our monetary union is as close as it gets to a collective economic defense clause. An attack against one of its members would be an attack against all of them, because it would affect a key element of our shared sovereignty. Sharing a common currency also fosters a sense of belonging and transcends national borders. It is also reflected in citizen support for the euro, which is rooted largely in shared values. It provides a powerful anchor of stability, cementing European trust in their money even in times of crisis. The bedrock of our currency is central bank money, embodied by banknotes that we have in our wallets. When Estonians, Latvians, and Lithuanians hold euro banknotes in their hands, they hold a tangible reminder that they are part of a united Europe. In a world that grows more fragmented by the day, there are strong reasons to preserve and reinforce our money in the years ahead. That is why we are designing a new series of banknotes which will celebrate our shared culture and Europe's natural heritage. And that is why we are getting ready to issue a digital euro. As payments become increasingly digital, central bank money must evolve to keep pace and remain an option for all the people of Europe. As the role of online payments has grown, the role of cash in all day-to-day transactions has been declining at a fast pace. Commissioner Dombrovskis just reminded us the number on the decline. Alongside banknotes and coins, the digital euro would ensure that European people and business can pay digitally using sovereign money anywhere in the euro area at all times. Let me now turn to why the digital euro would safeguard our autonomy and economic security. As the use of cash declines, Europe is increasingly dependent on non-European payment solutions. This puts us at the mercy of decisions made elsewhere. The fact that Commissioner Dombrovskis and myself are repeating this issue tells you how deep we feel about that, how important it is to remind everyone that we should be the owner of our own destiny. 2/3 of card-based transactions in the euro area are processed by international schemes. And again, today, in 13 out of 20 euro area countries, daily installed payments depend entirely on these schemes. Estonia, Lithuania, and Latvia are a case in point. This excessive dependency not only hampers competition, resulting in higher fees for merchants and translating to higher prices for consumers. It also calls our sovereignty into question by threatening our ability to act independently in one of the areas most critical for the functioning of our economies, that is money. The digital euro would ensure that Europeans can transact seamlessly and securely without being dependent on decisions made outside the EU. With the digital euro, Europeans would remain in control of their money, their choice, their future. The digital euro would also empower European payment companies, including Baltic banks and fintechs, by providing a powerful infrastructure, open standards, and a European-wide acceptance network. A digital euro would allow these companies to scale up their solution across the continent in a cost-efficient way. And they would be able to use the digital euro platform to offer innovative services that would make life easier for consumers and businesses, as evidenced in the report we published last Friday, which presents the findings from our innovation partnership with market participants. The digital euro would also strengthen European resilience. Payment systems are as critical as other infrastructure like energy. And when critical services fail, people expect public authorities to maintain continuity. This is not hypothetical. Incidents like sabotage in the Baltic Sea remind us how fragile our system can be. The digital euro, alongside physical cash, would preserve the resilience of our payment system through three critical features. First, its infrastructure will be distributed across at least 3 regions, each equipped with multiple servers. So in the face of a cyber attack or other crisis scenarios, digital euro payments could continue. Second, the ECB will provide a dedicated digital euro app, which will let you switch seamlessly between providers. This means you will be able to continue using your digital euro even if some providers are hit by an outage. Third, the digital euro will also function offline, adding another layer of security and reliability. This feature has benefited from the active contribution from several euro area countries, including the Baltic states. Allow me to conclude. At its core, our shared currency is a declaration. We choose unity over division, community over isolation, and common destiny over fragmented paths. This idea is at the very heart of our work on the digital euro. As the ECB President Christine Lagarde recently said, quote, "The digital euro is not just a means of payment. It is also a political statement concerning the sovereignty of Europe," close quote. The digital euro offers a digital form of the very same cash that we all use every day, from Lisbon to Tallinn. It would be a European solution based on European infrastructure. In the Euro Summit statement in March, European leaders emphasized that in a more fragmented and digital world, accelerating progress on a digital euro is key to supporting a competitive and resilient European payment system and contributing to Europe's economic security. But a project of these scales requires the expertise, creativity, and commitment from all stakeholders, especially the national communities who brings local insight and innovation from every corner of Europe. Through close dialogue and active engagement at events like today's, we can shape a digital euro that will reaffirm Europe as a place where innovation serves the public good, where resilience meets opportunity, and where our shared currency continues to unite us in an increasingly challenging world. Thank you very much for listening.
Thank you, Piero. I could not agree more, but I would like to ask you to come on the stage again and take a seat for the fireside chat. Now, ladies and gentlemen, we will continue with a more informal discussion focusing on digital euro and strengthening Europe's economy. And you will also get your chance during the fireside chat to ask questions. But for starting, I would also like to invite Mr. Dombrovskis to join us on the stage, maybe to take the middle seat. And for moderating this session, please come on stage, Madis. You can take this one.
Thank you again, Rainer, and thank you, Valdis and Piero, for your introductory comments. So the idea now is to have fireside chat. We actually don't have a fire here. I think you understand why. But we just imagine that I think we're like sitting around a campfire, or maybe since we're wearing suits, we're sitting in front of a fireplace and having an informal chat about digital euro. Actually, there are some people watching, but we don't mind too much. The plan is that I will ask a couple of questions to start the discussion, and then I will also open it for questions from the floor. So you can already think of your questions, and then I have some more questions once you have had yours. But maybe just to start and build upon what you both also said in your speeches. We see that people are less and less relying on cash as a means of payment. All the commerce is becoming more digital. We're using card payments mostly in Estonia for everyday purchases. So in light of that, how do you view digital euro as, is it more of a technical upgrade of the cash that we have, just making it digital for the future, or does it have a bigger meaning or importance for the monetary union or the strength of our currency? So that's a sort of a general starting question.
Actually, I find this way of thinking about digital euro as digital equivalent of euro coins and banknotes as a useful way to think about digital euro. And often when you think about certain functionalities of digital euro and so, often you are well helped with thinking the functionalities which are kind of closer to replicating what euro cash would do. So from that point of view, yes, and it's in any case expanding the use of central bank money, because currently the central bank money is cash, and cash is in decline, so that's a way to bring central bank money into 21st century, also thinking about all the monetary sovereignty aspects and so on. But at the same time, obviously, there is more to it, so that's why both of us were talking a lot on the resilience and strategic autonomy of our payment solutions, payment infrastructures, something which we cannot, so to say, completely leave to the outside world, where we need to have control of our own.
Right. Piero, you want to add to that?
Well, yes. I mean, let me take this question from a pure central bank perspective, right? What do central banks do at the end of the day? We have in our mandate one simple thing: offer to the society means of payments, both at the retail level and the wholesale level. We have been doing that for centuries, if you want, right? Thereby constructing this healthy equilibrium between private and public money, which has served us so well for so many years, again, both at the retail and the wholesale level. So from our point of view as a central banker, we should keep doing this, providing liquidity and means of payments to the people, both at the retail and the wholesale level. And this is what we are doing essentially at the ECB. Now, for the retail, why do we have a problem? We have a problem because if cash is not, although we do our best to keep it in the society, the technological transformation and the preference of people are somehow marginalizing cash. Think just one simple thing. About 1/3 of our transaction is e-commerce transaction. You cannot use cash on that. So if we don't provide an equivalent to cash, we are restricting the freedom of our citizens to meet their needs on an important space of their daily life. Again, 1/3 of ours. So for us, is a mandate, is to fulfill our mandate to provide liquidity also at the retail level. That's why we need to do that. We are not here to decide how people should be paying. Let them choose what means of payments to use, but we should provide that. This seems to be a small thing, but has a very far-reaching consequences, especially in Europe. Because the marginalization of cash, the space taken by e-commerce is not taken by European providers. More and more non-European providers are stepping into this space, therefore making our dependency every day stronger. So as every day goes by, we become more and more dependent on strangers, especially that. So that's why, this element of keeping liquidity and means of payments available to people is so strategic. Because preserve the freedom of people to choose how to pay, and at the same time preserve or reinforce or help us to regain our independence in this field.
Yes. So I understand very well, and I think it's easy to explain the point that we don't want to be completely reliant on non-European payment solutions or card schemes for such a critical function as payments is. Now, you both mentioned also the difference between public and private money and the need to provide by the central bank, sort of the central bank money in addition to the commercial bank money that you use regularly when paying by card. This is actually something that I have found much more difficult to explain. So is it something that only the central bank economists care about, or do you think the fact that we need to have central bank issued money directly in the hands of the public is also that important that it's possible to explain it why it matters?
Well,
either way, Piero.
Yeah.
Well, depends who we are talking to. Huh?
Mm-hmm.
So communication had to be tailored depending to the audience you have in front of. But don't get confused. You know, my sense is that people understand much better than we think what public money and private money is. Let me give an example. As we know, so many years ago that we saw people lying before, in front of a bank when there is some rumors about the stability of that bank. Moreover, as we discuss with people, we explain to them, people understand why people is so attached to cash, for example. Because it's easy to use, is inclusive, and preserve privacy. So, in some sense, people are able to distinguish the different form of money. And you can see, as I said, both when you see some tension, you see people going to cash, but also when we now test the people knowledge about the digital euro continuously, right? And they seem to understand. They say, yes, we would like to have some sort of money just as an alternative, just as a way out. So, for example, our latest figure is that 66% of the people that we interview are willing to start using the digital euro. Not bad for something that it doesn't exist yet. Why such? Because people understand, associate this idea of having a digital form of cash in the digital era. So I wouldn't be so skeptical. Obviously, here we are on a conference where people are very well educated, so they understand that this equilibrium between private money and public money reinforce each other. It's not going to be, we are not talking to competing with the private sector. We are talking about providing an anchor to the private sector money even in the digital era. So that's what we are talking about, and we should not shy away from explaining a little bit more complex concept, especially when you are talking to an educated audience.
Well,
Is you're as optimistic, or you share the
views? I broadly share this view because indeed, if we talk about safety, central bank money is as safe as it gets. So from that point of view, it provides some additional opportunity and layer of reassurance for citizens. Also important element which I would mention, which features very much in public discussion, is a question of privacy. So we have designed this digital euro proposal with a high level of privacy in mind. So in a sense, central bank will know less about the people's transactions than currently commercial banks or credit card providers know. Of course, it's not going to be complete unanimity because we also have our anti-money laundering, counter-terrorist financing legislation. There is a risk of fraud which we need to address. So there are going to be some safeguards, but in a sense we have been having those privacy considerations very strongly in mind. Also, another element is this offline functionality, which again brings digital euro closer to cash in terms that it provides almost cash-like unanimity in case of those offline digital euro transactions, because those are transactions which takes in a physical proximity and it also provides for a possibility to house those transactions, as I was mentioning, even in a situation when there is no internet or there is a power outages, there is still possibility to do transactions in offline digital euros. So it's add also this additional layer of resilience. So I think when we are having those public discussions on those topics, obviously it's just arguments that, this is central bank money versus commercial bank money. It's probably not the only one which is important for citizens, but there's obviously more to it.
I agree. Now, Piero, you also mentioned the argument that especially when there's an issue of safety about one's savings, and perhaps some concerns about the safety of a particular bank, then people realize the value of central bank and public money, and want to hold on to that. So that relates to the possible implications that having digital wallets where people can easily transfer their savings, what that could mean also for financial stability and the stability of our banking system. We have this debate about holding limits, so that it wouldn't be possible to transfer exceedingly large amounts away from a bank deposit to digital wallet. Now this has also become a sort of politically difficult issue, how high the limits should be exactly, and who should decide on that. So maybe on this process, Valdis, if you have a comment on how do you see that taking shape in the future?
Yeah, on holding limits, that's indeed something which we are putting in place. In a sense, we are limiting the store of value function of digital euro. And again, one can draw some parallels with cash in a sense that typically people do not store huge amounts of cash at home. So there are correspondingly also there are limits on this digital euro storage, having exactly those financial stability considerations in mind. And this was one of the indeed of stumbling blocks in the negotiations now on digital euro legislative proposal, because there was a bit of a tension between ECB, which was saying, okay, it's monetary policy independence and member states, which were saying, yeah, but it's about financial stability and we have to be involved but luckily we found this solution. So last week in Copenhagen, in Eurogroup meeting, we reached political agreement on institutional architecture, how this holding limits are going to be set. So I think we found a good balance between monetary policy independence and financial stability considerations from member states. So this is there, and then in a sense it will be for the ECB to set exact holding limit within the determined ceiling.
Okay, so there is a solution. But Piero, do you see financial stability as a major concern once we introduce digital euro?
Let me take a step back on this, right? I mean, this discussion about the financial stability, this is an issue that has been hunting central bankers for decades. Mm-hmm. And think about run on banks occur with or without digital euro. Actually, just think 2 years ago what happened in the US. SVB lost like 40 billion in a couple of hours. Mm. There was no digital euro there. So it's the digitalization itself of the minimum payment that makes much easier to move more money around. So financial stability concerns are there, regardless the the existing of the digital euro. And to tell you the more, what's happening on the other side of the pond with stablecoin makes this risk even higher. Because in case you have a run on a bank, on a European bank, today maybe you move the money on another bank or some other assets, but still the money is in Europe. With the growing of American stablecoin, a run on a European bank means that we move the deposit out of the European system in the US. Mm-hmm. So the risk is there. Mm-hmm. And the central bank, the system, the ECB is at the core of the system. In our mandate is to preserve financial stability. So from the very first moment, we start thinking about this issue, how to avoid that, having a different way of central bank money for retail, avoid that this could add additional risk to the financial stability. So we have been designing the project in such a way to preserve financial stability. So we embed from the very beginning safeguard to the process. Let me mention some of this. First, digital euro is not remunerated. So it means that people would forego some small income that they can get from side deposit at the bank if they deposit that amount in the central bank money, in the digital euro. Second, we have this waterfall or reverse waterfall functionality, which allows people to pay with digital euro even if their wallet in digital euro is empty. So you don't need to pre-fund your wallet in order to pay for the digital euro. Let me give you an example. Suppose now I go downstairs and see a nice pair of shoes. If we were already in the digital euro world, and I wanted to buy that shoes, I didn't need to have already my 200 euros or whatever in my wallet to pay, because I could go and pay. The function would get the money from my account at the bank, transform it in digital euro, and pay. So for people, there is no incentive at all to move their money from the account, the bank account, in the digital euro wallet to pay. They can do that automatically. Third, only physical people can have access to the digital euro, so no corporation. Just to let you understand, the side deposit, corporation is a big chunk of side deposits. Mm-hmm. So these people cannot they have zero holding limit. Mm-hmm. On top of that was what Valdis was just saying. We are putting limits to the amount of digital euro that people can have. So at this point in time, the member state have decided the process to set the maximum amount. Within this amount, the ECB is free to choose the level, and we will choose it according to 3 principles, which are embedded in the legislation. One is the usability of the digital euro. I mean, to allow people to use it, the holding limits cannot be too low. The second is monetary policy implication, and the third issue is financial stability. Let me add one more thing, because this has to be clear. We do not put any limit on how much cash people can have. So logically, since the digital euro is an equivalent form of cash, in principle, we should not establish any limit of people about the digital cash. But we have the concern of financial stability. Mm-hmm. But we better be proportional on how much limit we put on the freedom of people. Mm-hmm. So the holding limits we need to understand that the holding limits is a restriction of people to hold central bank money, which is their money, our money. It's not somebody else's money. So we will put that. So the three principles that are embedded in the legislation will be put together, and this is what is going to determine the possible proposal of by the ECB when the time comes.
Okay, so I suppose one can conclude that we have thought about financial stability implications. The holding limits are there in order to sort of provide a safeguard, but at the same time, the risk of bank runs is nothing new, and it has always been there, and there are other ways banks can still run out of deposits and have a liquidity problem. I wonder if there are any questions from the audience. I have, of course, some more, but we have microphones. I can see two already, one here in the front. And please introduce yourself also, and then go ahead.
Yeah, Marko Pahor, Banka Slovenia, also member of the HLTF on digital euro. So there's one, I think it's important issue was not touched in this panel, and this is a great panel to touch this, and it's the instant payments. Now we've seen it, at least on the surface, that the banks and the PSPs in euro area really stepped up their efforts of doing something with these instant payments. EPI is talking to smaller PSPs that have their own solutions to maybe adopt Vero instead. There's big talks about interoperability between different operators. And also, we've seen that the rapporteur in the European Parliament is a big advocate of private solutions on instant payments. So how do we respond to that?
So I guess the question is basically about the private sector solutions to the problem that we're describing. And why do we need a central bank push here necessarily? We have maybe some private sector alternatives, but do you want to, Valdis, comment on that?
Yeah, okay, on instant payments, indeed, this functionality is improving, but at the same time, we still do not have pan-euro area private solution. Also, the European Payment Initiative, which you mentioned, it's how many member states? 6 plus minus 5 maybe even now, yeah? So it's a limited number of countries which are involved. It has not really yet picked up. But obviously, when we were designing the digital euro legislative proposal, we had also those private sector solutions in mind and thinking about complementarity with the private sector solutions using to extend possible existing infrastructures, and also thinking about remuneration models, because obviously when we are setting up a digital euro, we have to find the right remuneration model, which so that it's interesting for payment service providers, including banks, so that it's interesting for merchants. And I think this issue will be to a large extent solved by the fact that the ECB will be providing this infrastructure without charging any kind of scheme and other fees. So that will be an advantage for payment service providers. And what we are also proposed, in a sense, is have a cap on merchant fees, because it's clear that if we put a legal obligation of merchants to accept digital euro, because that's what legal tendered status does, it's important to ensure that they are not overcharged. And all in all, we see that what we'll be able to achieve is fees for merchants which are lower and more transparent than what current payment like international card schemes are providing. And actually, just last week we had a event on digital euro in Brussels, organized by Bundesbank, focusing exactly on this merchant perspective, and they were very much emphasizing this, that very much also when looking at initiatives like European Payment Initiatives or Vero or so, that it's not just replicating what the international card schemes does in terms of fees. So that was a major concern for them.
Right. Eero, how do you see the private sector role in this?
No, I mean, yes, this is a very important issue, but let me go back to what I was saying before about the coexistence and the healthy equilibrium between private and public money. We are discussing the same things. At the ECB, we have been advocating and asking and supporting the private sector to develop a pan-European scheme. We have this European retail payment strategy in which we have been advocating for private sector to scale up at the pan-European level for many years. And we have been supporting any private initiative in this direction, because for us it's essential that we solve this dependency as soon as possible with all the possible means. So we have been encouraging. And the Digital Euro project is not against the private sector, will support this private sector effort to scale up at the European level. Let me give you three simple reasons how we are doing this. First, co-badging. Private initiative could co-badge with the Digital Euro, thereby providing to their clients coverage. So their client could pay not just where the private sector solution is accepted, could pay everywhere in Europe with one single means of payments, thereby saving fees that the banks now pay to other solutions. Second, because the Digital Euro is legal tender, Valdis was saying that all merchants need to accept it. The standard that the merchant will use to accept the payments of the Digital Euro are open standards. So private sector solution can use the same standard to roll over Europe, their own solution, not the Digital Euro, their own solution, thereby making easier for them to scale up at the pan-European level. Today is so difficult because it's costly to expand your own private acceptance network. It's extremely costly. The Digital Euro would provide that for free because it's a public infrastructure. Mm-hmm. But there is one dimension that we do not discuss so often, but is key. The Digital Euro, it's the technical infrastructure, the back end, will not rely on scriptural money, which means, an entry in a book. It's something more sophisticated. I don't want to become too technical, but it's so sophisticated that allows us to exploit what we call conditional payments. Conditional payments could be the future because it allows you to condition the way you use money on many dimensions. Today, we condition the use of money on one dimension. Pay Valdis this amount at this point in time. What if we could enlarge the scope of conditioning? Pay only if the train arrives in time? Pay only if my goods have arrived to my door and not before? And you can embed many other solutions. That's not the ECB dream. This is the reality. We just launched a call for idea, and Friday we published the result of this call for idea. I invite all of you to read this report to see how many ideas private sector is suggesting they could develop on the conditional payment solution. This is another way through which private sector could leverage on the Digital Euro.
Just to add my own comment on this, and the way I've looked at it is also, of course, that we want different methods of payments complementing each other. So I would be very happy if we also had instant payments-based payment methods available in Estonia. I hope we will, and then I hope we will also have Digital Euro as an alternative so people can choose. The problem with those initiatives so far, the instant payment based ones, for example, is that so far we do not have a pan-European solution that would have been successfully rolled out everywhere. And another issue is that this question of resilience, that at least we in Estonia consider very important, that you could also make offline payments if people are not using physical cash anymore, that would not be there with instant payments. And just to complement, Piero, what you said previously, that there's not much incentive for people to hold too much digital euro in their wallets because there's no interest payment on that. I think we should still encourage them to have a little bit, at least, for this, for those emergencies, if there's a breakdown in the other electronic means of payment. But looking at the clock, I think, well, I have many questions still, but I promise to give another one to the audience, so please.
Thank you very much. Good morning, tere hommikust. My name is Jaakko Vero. I'm head of the Financial Stability Authority in Finland. So we are the National Bank Resolution and Deposit Guarantee Authority in Finland. And I would pick up on this question about resilience, both in the online and offline form. So my question would be, how do you see the kind of resilience and preparedness by design in the online version of the digital euro? I heard from Mr. Cipollone that you're planning, for instance, to have 3 or 4 regional sites through which the digital euro technical operations would be managed. This is, of course, I think very much of interest to us on this side of the Baltic Sea. Also knowing that, for instance, ECB target services are mainly operated by 3 big central banks, somewhere very close to the Alps. So how have you been considering this issue within the ECB? How do you see this regional dimension? Can we expect that maybe we would have one of the processing sites for digital euro on this side of Baltic Sea maybe? How do you see this? And on the offline topic, I understand that the offline functionality is seen very much as something that would bolster the preparedness and resilience value added of digital euro. So just to make sure, can you all confirm that it is your view that if the Governing Council will decide to launch digital euro, that offline functionality will be available from the day one, and it's not being considered as a separate value-added functionality of the digital euro? Thank you.
Thank you for excellent questions. I think we have to be pretty quick with our responses looking at the clock, but please, Piero.
So I can confirm that the structure of at this point in time, that the back end will be distributed on 3 regions. But this is because we tender the back end from at the Eurosystem level. There is an alliance of central banks that are providing the central bank. So at the end of the day, it's their choice where they will locate the center. This is safer than target services. It's safer because target services is 2 regions, 4 sites. So this is much more resilient than that, because this is at least three sites. So this is much more resilient than the target service, which is already very safe. On the offline, I can confirm that the intention is to start from day one, because it's so important for resilience that definitely it's not just resilience; it's also inclusion. So for us, day one is the day in which we will issue the digital euro also on the offline.
Well,
I can just confirm this.
You're confirming it as well.
Yeah.
So am I. So from my perspective, the way I view the main arguments, first is really the need to have a European solution for payments that would be available in every, at least euro area country. We wouldn't be dependent on a foreign or service provider from outside Europe on a critical function. And indeed, this resilience is the second important consideration, and offline payments being an important part of it. So I hope it will be there for day one.
Now, let me add something. the whole infrastructure of the digital euro will rely on European providers owned by Europeans. So the resilience and the strategic autonomy is built in the process from the very beginning. So this is another layer of resilience, if you want. It's a different kind of resilience, but it's an important resilience as well.
Yes. So this, ladies and gentlemen, was just an introduction, because we will discuss all of those issues in greater detail now in the following panel discussions. But I will just want to thank you, Valdis and Piero, for coming to Tallinn once again and for providing your contributions to this discussion. Thank you very much.
Thank you.
My pleasure.
Thank you for this insightful discussion. And indeed, it frames nicely the discussions in the following panels where we can go much more into detail. It's also good that there were already 2 questions from the audience, so you are warming up. We will have also questions at the end of each panel. This was our guidance to the moderators also, to give you the opportunity to ask and for them the opportunity to explain. But now let us move to the first panel, making the digital euro a reality. And I will call the moderator and the panelists on the stage one by one. This panel will be moderated by Hashim Hassan. He is the Vice Chair of the European Council Working Party working on digital euro regulation. Please join us on stage. You can take a seat there, indeed. And as panelists, I would like to first invite on stage from the European Central Bank, the Program Director of the Digital Euro Project, Evelyn Whitlock. Second, from Ministry of Finance, the Estonian Chief Negotiator on Digital Euro at the European Council, Kadri Martin. Third, from Latvijas Bankas, Board Member Marius Kaudis. Fourth, a member of the European Parliament and Vice President of the Greens EFA Group, Virginijus Sinkievičius. And as last panelist from Latvijas Banka, the Councillor at the Permanent Representation of Latvia to the European Union, Mikelis Sondaks.
So thank you, Rainer, and good morning, everyone, and welcome to the first panel of the day. My name is Hashim Hassan. I'll be moderating this panel, and currently I'm the Vice Chair of the Council Working Party on the Digital Euro regulation under the Danish presidency. So maybe just to set the stage a bit here. So the aim of this panel is to give you all a shared understanding of the technical, but also the legislative process and progress so far, but also the outstanding issues and what's ahead of us. So the digital euro has been discussed for several years now, but I believe that we are currently at a very important stage where co-legislators are working intensively on the regulation. The ECB is making advancements in the preparations, and we're also seeing market participants being involved in the digital euro rulebook and other things. So this is really to try to facilitate a broader discussion, and what we will try to do today is to see what have we achieved of progress so far, where do technical and legislative processes meet, but also which and whether market participants should start preparing. I think I will stop here, and maybe we could have a brief round of introductions, if that's okay with you. And Evelyn, would you like to briefly introduce yourself, and then we can take a round?
Yes, good morning. It's a pleasure to be here. My name is Evelyn Whitlock. I'm the Program Director for the Digital Euro. I joined the ECB specifically for this project, and before that I've been in the private sector working on payments most of my life.
Good morning to everyone. My name is Kadri Martin, and I have been working on Digital Euro project from the beginning, but from the member state perspective. and participating from the beginning in the negotiations of the Council.
Hi, I'm Marius Kuodis, board member at the Bank of Lithuania. Only 6 months in my position, but I returned to the central bank after 7 years in government. So.
Good morning. My name is Virginijus Sinkevičius. I'm a member of the European Parliament, vice president of Greens EFA group, but also a member of the Econ Committee.
Good morning. Miķels Zondaks, Chancellor at Latvijas Banka. I started my involvement back in Riga, nationally wise. Now, for the past year, I'm in Brussels, mostly in the Council working parties, but not only.
Great. So I think we have both the Council, the European Parliament, ECB, national central banks, but also people close to the national stakeholders as well represented. And so we can, I think, get a very broad perspective of different opinions here. So maybe let's try to discuss where we are now. Where are we today? And Evelyn, I think maybe perhaps you could kick this off. And since you are very close to the technical preparations, would you be able maybe to give us an overview of the key milestones that you have achieved, but also how they feed into the legislative process as well?
Thank you very much. So we have been, as the Eurosystem, on a journey for quite a while. We did some work on the digital euro, but the real work started when we did the investigation phase, which ended in 2023. And in this phase, we mainly focused on the design of the digital euro. So we started with an idea and a concept and really worked out in all the details on the technical side, on the more compensation model side. In that time frame, also the Commission worked on their draft legislation. So in June 2023, the Commission published their draft legislation, and we, in October of that year, we moved to the preparation phase. So that is the phase we're still in, and we focused, as the name says, on further preparations. We had a couple of important milestones. First of all, to finalize sourcing, so for the parts that the Eurosystem would need to provide, to find solutions, both internal Eurosystem as externally. So we are closing the procedures there, and we are able to publish soon. Pierre already mentioned the fact that we really wanted this to be European. We worked on the rule book, which is very important because it really details out what both the Eurosystem, but also merchants and PSPs need to build once the digital euro would be launched. This is currently under consultation with the Rulebook Development Group, which is a group not only with a central bank, but actually more importantly, it's with representatives from and experts from merchants, consumer organizations, but also payment service providers. So we really do this with the market. And then we have done further experimentation, both on user research, but also innovation will be later on something more in the panel. And then on the back of that, we have also supporting the legislative process, which further allowed us or forced us to deep dive on certain design principles and decisions, and resilience has been one of the topics we worked on. So that's where we are, and on the legislative side, I'm quite sure that the others can tell more.
So I think it sounds like there's a lot of different things going on and many different tracks. And I think, as you also just mentioned, there's also the legislative track. And Kadri, you are part of that track in the Council. And there's also a parallel track in the European Parliament. But maybe, Kadri, could you maybe start off by giving us a sense of where are we in terms of the negotiations in the Council today?
Okay, thank you very much. So I will be starting by a short overview of where we stand, where the Council, EU Council stands in the negotiations of the digital euro legal framework. First, I want to mention that for more than 2 years, we have been holding discussions under 5 presidencies already, from Spain to Denmark currently. With these negotiations, we have reached the point where during the ECOFIN, so the ministers of finance, discussion in July this year, ministers broadly supported the Danish presidency's ambition of finding a council agreement on the digital euro legal framework by the end of 2025, so that we can also start the negotiations with the European Parliament. And the ministers also called for work to be taken forward at both the political and technical levels to achieve that goal for agreement. And after that discussion, the euro area ministers agreed on the Eurogroup's political guidance on the institutional framework for setting the ceiling for the holding limits, as discussed already during the Fireside chat. And this has been one of the controversial issues, from the political perspective, blocking other questions from moving forward in the Council. And as stated by the Eurogroup president, this agreement on the process of setting a holding limit and establishing a governance framework for the issuance of the digital euro, so that also the member states can participate somehow in the decision of issuance, signals collective determination to advance the digital euro project. So this political support from the ministers was clearly there. Other main areas in which progress should be made under the Danish presidency to reach our goal in the Council include digital user privacy, a fair compensation model, and the distribution of the digital euro. So these are the most prominent open issues. And in addition, we still need some fine-tuning of principles for the digital euro to improve the payments resilience and preparedness, a discussion that Estonia, together with other Baltic states and Finland, initiated at the beginning of the Polish presidency, at the beginning of this year. To achieve the mentioned goal, among other elements, we need to ensure that offline payments can be made using the digital euro from the first issuance, and preparedness by design of digital euro, also mentioned already today. And actually, let me stop here for this part of discussion.
Thank you, Kati. So we've seen progress, but we also see still some outstanding issues on the table from the Council side. And maybe Virginius, do you see alignment with the Council here, or do you still have diverging views on some of these topics? So where, from a Parliament point of view, where are we?
Yes, thank you very much for your question. In general, of course, Parliament is very positive, and those positions, they are quite well aligned. Clearly, with the current circumstances, instrument like digital euro is, of course, extremely needed in Europe to ensure that we have an instrument which works online, offline, and in times of disruptions, which we see an increasing number. I think Parliament position mainly focuses, first of all, of course, on democratic oversight. So not only ECB would be involved, but Parliament's role as well. Privacy is extremely important. I think the rule book, which was published, also covers a lot of actually Parliament concerns. Then interoperability and ensuring that it's well distributed through the Eurozone. Inclusion of all, it's extremely important for the Parliament. And then, of course, the financial stability, ensuring that there is no significant shift which might cause instability from the commercial banks then to digital euro. But in general, European Parliament is extremely optimistic and, of course, looking forward to beginning of the negotiations and hopefully swift finalization.
Thank you. Okay, that's very interesting. It also shows how co-legislators are moving in parallel here. And maybe moving more into the national stakeholders, both you, Michaelis, and Marius, you, I believe, are closer to the national stakeholders and the views coming from these. So maybe a a question to both of you here would be that what are the main expectations, but also the main concerns that you hear from national stakeholders at home at the current point in time? And maybe for you, because it's not at home, but maybe from Brussels, also what you are hearing.
I would say that those concerns are quite similar. For the private persons, it's mostly privacy, but as Commissioner Valdis Dombrovskis said, that it's already designed in the proposal. So it's more a question about how we explain this to the society. But the other two concerns are mostly with the market participants. One is costs. Then again, we can explain something by the principles that how we are building the digital euro, that we'll try to utilize what we can from the existing solutions. But the other part is division of responsibilities. And it's not about the communication, it's about having finished regulation and then a rule book, and then you can only explain how it will be divided between the market participants, ECB, and other stakeholders.
Thank you.
Yes, in the case of Lithuania, we actually tried to proactively engage different stakeholders. First of all, we have just concluded our payments market strategy in Lithuania, and we asked different stakeholders what are their views, how our market should be developed. And at the same time, we used different events, meetings with business associations, actually to talk already about digital euro and about different opportunities. So regarding citizens, what citizens in Lithuania are mostly interested in is offline payment possibility. This is what I would say is the most important thing for us. Of course, there are other options, emergency switching between payment service providers, also other issues, but offline payment opportunity is, I would say, the key. The second question, what I'm hearing from ordinary citizens is when? So when are we going to have the digital euro? Regrettably, at the moment, it's very difficult to say the final date, and we need that. We need predictability. Now, when it comes to retailers are also interested in the final date, when we should prepare, but they are mostly interested in cost, I would say. They're trying to compare the fees that they need to pay for using the existing card schemes. Of course, there are a lot of fintech solutions, fintech options, so they are comparing, is it going to be better for our businesses or not? What would be opportunities? So they are in general interested. Now, when it comes to the financial sector, I would also differentiate between different groups. Traditional commercial banks. The main question is how much it will cost us to adapt. When we are talking with fintech sector players, and there are a number also from Lithuania in this hall, I see more curiosity and, more thinking about opportunities, what opportunities could be there, how we could integrate our services, and so on. So different stakeholders, a lot of questions, but I think the general interest is to move forward and probably faster than slower.
Thank you. So maybe just to recap, what we've heard so far is that there's a lot of ongoing work. Some of the main issues that we are still tackling is on the compensation model, on the privacy. We heard that there's more progress on the holding limits as well, but also from the stakeholder side, it very much feeds into these outstanding issues as well around offline capabilities, privacy, and also compensation for the industry. And maybe if we then zoom a bit out and how the national EU level perspectives interact with the technical preparations here. So maybe, Evelyn, from your point of view, how is this project being designed so it works with the existing infrastructure? We heard from the previous Fireside chat that this should work in parallel with everything else as well. So from the ECB side, what are you doing to ensure that it's working with the rest of the market here?
So most of that work is done in the rulebook development group, where we work with all the stakeholders. Important to know, starting point there is that we look to find the most cost-efficient way to implement the digital euro. But we also need to make sure that we achieve the goals of the digital euro. So we need to find a balance between what can be reused and what we need to invent on offline. It's rather new technology. It's really something that's currently not there. So there we really need to find a way. And actually in the last 2 years, we have done a lot of work also in the sourcing to feel confident that we can deliver and it can be done. But in the development, we look for reusing existing standards, but also looking to how current infrastructures could be reused for the digital euro. But we do that with a couple of things in mind. So, for example, privacy, which has been mentioned quite a lot. So the offline in itself is very cash-like because you hold your digital euros on your devices. And if you do a transaction between devices, nobody can see that. So in the design, it's I would say, as private and as close to cash as we can get. For offline, it's slightly different for what was mentioned also for AML and CFT reasons, anti-money laundering and counter-terrorist finance. And there, so the banks will need to do what they currently do, but then before the transaction goes to the euro system, it will be anonymized. So that means that in our systems, we will not be able, we don't even have the information to connect a transaction to a private individual. So I think that is very important. So all in all, we do see, and then also I want to make a link to the topic on cost. With this focus on reusing standards where possible, but also allowing current infrastructures to include the digital euro, we believe that the cost could be minimized, I would say, in the sense that, of course, there needs to be done investment, but we really try to look for a way to do it as cost efficient, not only for the euro system, but also for market participants. And that's one of the reasons there are some estimates on cost going around, where we do believe that, for example, synergy effects have not been very well taken into consideration. So we pay a lot of attention to do this, and to do this together with the market, where we have the experts to make sure that we put something there that is as efficient, but then also as robust as possible.
Thank you very much. I think that's very clear, but that also leads us into the political and legislative process. So with all these ongoing preparations, all this work with market participants, from the regulatory side, at least from the legislative side, how do you take these preparations into consideration when you are preparing the regulation? And I think maybe this is more a question for you, Kadri, and Virginius as well. So how it is being merged in practice?
Yeah, thank you. Maybe first it's important to mention that the ECB would decide on whether to introduce the digital euro only after the Council and the Parliament have adopted the enabling legislative framework. And also to remind what the overarching aim of the legal framework is. And it's to lay down the EU legislation necessary to regulate the establishment of the retail digital euro, and as also mentioned today, as a complement to cash and also private sector solutions. And also to regulate the essential elements, so the basic principles of the digital euro. And the second, so overarching aim is to address the single market dimension of the digital euro by providing for the conditions under which under which payment service providers outside the euro area may provide digital euro services. In our region, we see it also an important topic because Nordic-Baltic market is very integrated. And the ECB has been engaging closely with the EU Council and the Eurogroup on major design issues and the aspects of the digital euro that are relevant for the EU policy more broadly. The EU Council, from the other hand, seeks to ensure through the legal framework and high-level principles that the policy perspective and expectations to the digital euro are considered in the rule book and digital euro design. Therefore, the ECB has, with advice and technical expertise, always been part of the Council negotiations, and it has been very, very useful. From the Council perspective, in my understanding, and also in Estonia, it's key that the digital euro is introduced in a way that makes it an innovative and attractive means of payment and ensures the resilience of payment services in exceptional circumstances, as also mentioned several times today. And this could provide real added value compared to current payment solutions largely dependent on service providers outside Europe. In the event of failures and considering the context of digitalized societies, as one example is Estonia, of course, we should not necessarily revert to cash if exceptional circumstances occurs. And also, as Mr. Cipollone stated already today, given our objective to promote the wide use of the digital euro in normal times, it's also natural that the people expect that the digital euro ecosystem is functioning also to a reasonable extent in exceptional circumstances. I think those elements are key importance in the interlinkages, in the negotiations.
Thank you, Katri. And Virginijus, I think the same question to you. How is the European Parliament taking the ECB preparations into consideration here?
So I think the key milestone was, of course, the rule book, which gave a lot of clarity, which I think what is extremely important signal that there is a flexibility there as regards the involving legal framework. But at the end of the day, you know, of course, we'll have negotiations. The legal framework has to be clear as regards the implementation. But then the most important thing is the user experience. By user, I mean from a citizen who will use it to the fintech, payment service providers, and etc. So I think the ECB already started to work with the stakeholders, and that gives a good understanding, which of course will inevitably fit into the legal framework. Legal framework, I think, will address, of course, the most important issues. As I've said, there are a lot of alignment, but as regards the data, the privacy issues, and so on. But at the end of the day, what we truly want to achieve, I think, is ensure that we building up Europe's strategic autonomy, and this is one of the ways, making us less dependable on Visa and MasterCard. With the significant increase of e-commerce, you also have a significant increase of scam. I'm also a shadow rapporteur on PSD directive, and one of the main Parliament concerns is of course prevention of fraud. And here is a great tool, I think, especially with the release of payment when your goods arrived. So I think extremely important is the operational part. So the rule book, which is released by ECB, gives us a great glimpse into it, which we also can then apply as regards the interinstitutional negotiations.
Thank you. And I think this also shows that it's very important that the two tracks are very much aligned. And maybe looking ahead, Marius, what do you see from the national point of view and as the main opportunities for the digital euro to strengthen payments and support users? And I think maybe that's also a bit touching upon what Virginia just said with strategic autonomy and so on.
After, two excellent keynotes and a very interesting fireside chat, probably, it's impossible to add something in addition about opportunities. But I would like to stress the resilience part. I think this is the key thing here. And if I could ask, the audience, who has never faced any issues when paying with current regular cards? Sometimes you are trying to pay in a supermarket, in a cafe, and there is no connectivity suddenly. The retailer asks you, to wait for a while, to return after a while. Then suddenly you receive a question, maybe you can pay by cash if you have that. So there are such issues, and they are daily issues, not to mention blackouts, what we had in the Iberian Peninsula, not to mention severe weather events when suddenly your mobile phones, stop working. For it may be a second, a minute, but this is the reality. And not to think about sabotage, activities that could happen. When Russia invaded Ukraine in Lithuania, the demand for cash increased by times, suddenly. And we needed, 3 days to adapt. The commercial banks, the central banks, we actually, put aside all the rules, and we basically worked together 24/7, to meet the demand, of citizens. So the resilience is of key. If you had money in your account, in your digital wallet, besides cash, you will have more opportunities. And this is, I think, the key thing, which is at the moment very important for all Baltic societies, but not also in the Baltic countries. One additional thing, I have recently had conversations with traditional, card schemes, Visa and MasterCard. And sometimes, you're hearing between lines that, the digital euro is something against them. No. If you have one data center, and in order to increase resilience, you decide to hold your data in the second and third one. So are you doing something against the first data center? So I don't buy that argument. It's about, resilience of the system. If something happens, at least, let it be a second, with one part of the system, suddenly, another one, starts operating, and that's it. So the digital euro could significantly increase resilience of our payment systems in Europe.
Thank you, Marius. And hearing your point of view on the Visa MasterCard discussion, I think Virginia, you also touched upon that. But maybe Michaelis, you have maybe a quite unique point of view, since that you are maybe on ground and closer to maybe also other stakeholders. So from your point of view, from Brussels, do you sense that stakeholders are already beginning to prepare, or are they still in the wait and see mode? Because I think we've heard that the Visa and MasterCard obviously have opinions on this, but have you heard anything else? Are you sensing anything else on ground?
I would say for sure they are involved. Maybe with preparation, we don't see here so much practical implementation because it's not there yet. But they are preparing in two ways, I would say. One is the ones who are not really willing to change something. They are past the if question now. They are challenging some aspects of it, but that's not bad. I think it should be able to answer all the questions to to have no doubts about why we need it and how we will implement it. But then again, we have also some market participants who are really interested in. As we heard, that there is an interest from them. They are looking how they would like to implement it, what benefits they will have. We have interest from merchants who are looking forward to lower costs. So they are involved in various aspects. But I think the challenge then is for policymakers to put everything together afterwards, all those interests and positions, so the end result is fit for purpose, so that we don't have we don't create a burden like we have done sometimes in the past, that we have some tools or regulations that are not seen as very helpful, although they might be, but it's just the way how they were implemented. But I believe that we will be able to do it so that we have some great resilience tool plus innovation enable.
Thank you very much. And I think that feeds nicely into the next part of this discussion, which I would like to structure as a more open discussion, so open question, and it's more regarding market readiness and the momentum. So as we've heard today, there's a lot of ongoing work on the legislative side, there's a lot of good work on the technical preparations, but also stakeholder engagement as well. All these things that you've mentioned today, which signal should this send to the market? I think Michaelis, you mentioned that some stakeholders are still asking the question of if. Some would argue it's more a question of when. So I think an open question for all of you, what signals should all of this send to the market at this point?
Shall I start?
Please.
Okay. So I do think that the progress that has to be made in the legislative process, and that has been nicely explained, do show that it's becoming very concrete now. So with the Council putting their position by the end of the year, with your help, and also indeed the Parliament, where the rapporteur has said that he will start issuing his report in October, hoping to finalize then end of April. We do see that the legislative process comes to an end, and I think with that we can be hopeful that in 2026 there is a legislation. As said, the ECB will not do any announcement on issuance or take a decision on issuance before this has been done, but afterwards you can expect that we would want to go forward. And with the preparations we have done in this phase, we are ready actually to go on the rule book, as said before. Of course, it has flexibility for the final regulation. That's why it's not the final rule book. We will make sure that it's fully in line with the legislation once it has been adopted. But we call it a 0.9 version, so we have done a lot of work together with all the stakeholders. And I forgot to mention that also in this group, the legislator, both the Commission, the Parliament and the Council are observers of the work that we do there. So we really try to involve all stakeholders. So in that sense, I think the work, everything we have published, including the rulebook, could help all parties to start preparing on thinking, okay, what would come ahead of us. What I do hope that we will see more and more, and we see it on the merchant side, as was in the event that was already mentioned by the Commissioner last week. We see that the merchants are in general very positive on the digital euro. They have a couple of attention points, but they stand ready to go. And I do hope that also on the payment service providers, they in general will embrace this as an opportunity. We clearly see this as an opportunity. We see this as an additional choice which adds to resilience. It brings the privacy that cash has also to a digital age. But it also can provide a platform for innovation. We published a report, Piero mentioned that already earlier. And last but not least, with the standards that we have, we truly believe that the instant payments rollout that has been, well, is almost finalized based on the legislation, with the infrastructure of the digital euro and the standards for the front end will also be a boost for those solutions. So yeah, that's my expectations and hope for the future.
Yeah. Any other perspectives?
I can be maybe very short. I think it's already mentioned, and I fully agree, that the certainty to the market and to the ECB is a key at the moment. It's important from the legislator perspective to give the certainty by agreeing on a legal framework. This will be already a substantial step forward and will increase certainty and gradually advance to addressing the vulnerabilities that we face in Europe, be it due to the dependencies of third country infrastructures or the security environment.
Well, answering your main question, what sort of signal it sends to market, I think extremely positive signal, very clear. Even returning to Visa and MasterCard question, I think it brings, digital euro brings a very healthy competition. Just last week I had a meeting with one of the merchants who showed me the charges Visa and MasterCard does on them, and the rules are changing every year. The charge is super unclear. Why and how it's charged. So I think merchants are, of course, going to welcome it. During the process of legal framework that the questions are raised, that's also, I think, absolutely normal. And as I said, I really appreciate ECB's work here, especially on the rule book, which showed that it's a living document, that it's not set in stone, and it's a living document with the flexibilities looking at, at the end of the day, providing instrument which will be inclusive across the Eurozone, which is going to work, again, taking into the consideration geopolitical situation. So, as I said, online, offline, and most important in times of disruption. So therefore, I think it is extremely positive signal to the market. On top of that, coming from Lithuania, which is a good hub for fintech, I think also gives a tremendous opportunity for the innovation for our European fintechs to scale up their products.
Any other?
I would like to add what I mentioned before, the problem that the division of roles is not certain, and this is something that should go out with a clear message, who will be responsible for what.
And if I could add a little bit, at least in the beginning of summer, I think we had more doubts. At least I felt personally more doubts. At the moment, I feel the momentum that we are there to have an agreement. From what I'm hearing, from the council, from what we're hearing from the parliament. So this is the momentum either to go forward or, to lose this opportunity. But we can't, lose it.
So I think there's common grounds here on that this is a very strong signal to the market, is a positive signal to the market. It's creating certainty, but there's still some outstanding issues in terms of division of roles that we will have to figure out as well. So I think we are close. We're getting close to the end of the panel. Before opening the floor for a Q&A, I would maybe like to try to have each of you give a closing remark, very brief, on what is the single most important milestone or challenge for the digital euro for the next year or two. If you can briefly try to, from your point of view, try to give us a brief answer on that.
Yeah, I think I can only echo what was said before. The most important thing is to get certainty on the legislation, which will then also give the certainty on the outstanding question and the roles and the divisions. So getting this done would be important.
Yeah, from my side, I would also stress again the responsibility of the public sector to adapt and take measures in a changing environment, so be it from the global perspective or security. And if we're already doing something from the public perspective, there must be a clear qualitative added value that would bring real benefits to payment service users and to companies, banks, and other intermediaries that benefit from the more sustainable use of European resources then.
I think what markets need, they need predictability. So we just need an agreement with all technicalities, and then we need to freeze it, to guarantee that predictability and for everyone to prepare.
For Parliament's role now, of course, key is the legal framework. So we need to finalize a process on the legal framework that would be clear, that would be fundamental for then successive rollout of the instruments. So working together with the Commission, Council, with the ECB's extremely important role, I think that's absolutely key.
I can just agree that it's important to finalize, but it's not only important to finalize, but it's also important to create the regulation so that it's future-proof. It will be, as we call it, a rails for market infrastructure. It will be there for a long time, so it's really important to do it right. We have spent a lot of time on this, so it shouldn't be a problem.
Thank you. So a future-proof, certain, predictable legal framework that could provide some added value and security as well is what I hear as the most important milestones for the next year or two. Well, thank you very much, and I think we have some time for a question or two. I see a hand already over there, so I'm sure some colleagues have a mic already.
Thank you. Riho Terras, European Parliament. I'm very happy about your optimism. Full of optimism. Everybody's very optimistic. Don't want to spoil the party, but I had an experience with the EIDAS, which is the electronic identification. I was shadow rapporteur and spent, well, hundreds of hours and more than 3 years on getting something out of it, and we did not succeed. So actually I have a question to Mr. Sinkevičius. Where do you draw your optimism? Because I know that this file is already stuck in the European Parliament for 2 years, and we are starting now from the scratch. So I am very much in support of digital euro, but I'm not that optimistic. So my question is, where do you draw your optimism from? Thank you.
Okay, so your support and me already makes two of us. But to be honest, I think the new rapporteur is appointed now. From what I heard, he is quite eager to go ahead. Legislative process is always complicated in the EU. We know that extremely well. But, well, I think the geopolitical circumstances gave an additional boost to this file. And if we want to increase Europe's strategic autonomy and lessen dependence, it's not only military and energy, but payment system is extremely important too. And as we could see from Marius' example, as well from the other examples, it's a critical moment. So therefore, I think it's extremely important that Parliament would play a role as a catalyst of this change. This is a file which you can explain to citizens back in Latvia, back in Spain, or in Greece. So therefore, I think we can definitely try to advance. Of course, a lot will depend also on the council roles, how much they are going to be pushing this file forward, because the presidency of the council, if it really takes it as a priority, it can do a significant job. So therefore, I think now with the new mandate, we have plenty of time, and I think the momentum is definitely there.
Thank you. I don't know if we have other questions. I think that maybe most of the room agrees. I see a hand in the back.
Founder of PSP. My question is, the instant payment was mentioned several times today, and WOP is stepping power in coming few days. Basically, the instant payment which was executed by 1 second is now, the time frame will change like because of additional technical issue, like 7 seconds or so. But the question is, if the digital euro, when it will be launched, and from the day one as a offline system as well, will it replace instant payment in 1 day, and instant payment solution is today temporary until will be launched the digital euro?
So will the digital euro replace instant payments?
Maybe I can answer from my side. Well, the short answer is no. The first thing is that instant payments has a broader application than, say, retail payments at a point of sale somewhere. And it's an infrastructure that transports commercial bank money, and the digital euro will transport central bank money. So in that sense, I think it's good that both of them are there. And actually, we believe, and it was said also in the panel earlier, that it's good that there is choice and that there's sufficient competition, and that actually the competition is more European than it currently is in Europe. So with what we see is that instant payment-based solutions at the point of interaction actually have problems to arise actually and to come to life. And with the standards of the digital euro, this would be further facilitated with this shared standard. So long story short, no, I don't think it will compete with the instant payment and make it useless. Actually, I think it will enrich it and make it stronger.
Thank you. I think we're almost out of time. So unless we have a quick question? No. Good. So on that note, I would like to thank you all for your in my opinion, very valuable insights. And I would like to ask the audience in helping me thanking the panelists. Thank you.
Thank you.
Thank you, Ashim, for this lovely panel and also the panelists. It was really interesting to hear the reflections. And I think we have earned a short break here in the Independence Hall, and also for people watching the live stream to have a coffee and maybe some snacks. Here in the room, snacks are served in the lobby. Restrooms are also there. And we will reconvene in roughly 30 minutes, but actually 12 o'clock sharp, with a topic of particular importance in the Baltic region, also mentioned in the panel already. We will focus on strengthening our preparedness and resilience. Thank you.
Imagine a digital single payment solution that could be used for any kind of payment throughout the euro area. Guess what? It could become a reality. A digital euro. Easy, safe, fast, reliable. Digital money from the European Central Bank at your fingertips whenever you need it. But how would it work? Say you've gone for a meal with a friend and you want to split the bill. Simple. Open the digital euro wallet on your smartphone, check your balance, enter the amount to pay your friend, confirm your transfer. Your friend will receive the money instantly, free of charge. It doesn't matter which country you're in or who your payment provider is. Payments are still made instantly, even offline. It's also easy to use the digital euro at your favorite local shops. Unlock your device, place it on the terminal, authenticate, make the payment online or offline. If you want, you can also use a physical card. What about e-commerce? The digital euro is also available when you're buying something online. Be it digital or physical, a euro will always be a euro and have the same value irrespective of format. Let's embrace the digital era with the digital euro.
Ladies and gentlemen, please join us here in the room. From the coffee break there, I can see people still having coffee and the chat, which is great, but to keep time, we have to continue. And I would also invite some people maybe who are standing, you can also take seats in the first rows as well, because then it's much more cozy and you get a better overview. So, it's time to move to the second panel, Preparedness and Resilience. In the morning keynote speeches and the fireside chat, we touched upon those topics already, and I really liked the idea that we have to stand on our own feet when it comes to payments in Europe. But to go into the details with that, let's start with the panel. And this panel will be moderated by Gert Auväärt. He's the Deputy Director General of the Estonian Information System Authority and the head of the Cybersecurity Center. Please join us on stage. And as panelists, I would like to first invite on the stage the CEO of Finance Latvia and a member of the European Banking Federation's Executive Committee, Uldis Serbs. Second, from Latvijas Banka, a council member and Latvia's representative on the Single Resolution Board, Ilze Pazuma. Third, from Lietuvas Bankas, the director of Market Infrastructure Department, and actually in a few days, a new board member of Lietuvas Bankas, Evaldas Rutskis. And the last panelist from Eesti Pank, the Deputy Governor responsible of digital euro and crisis preparedness of vital payment services and cash circulation in Estonia, Veiko Tali.
Ladies and gentlemen, distinguished panelists, it's a pleasure to be here. As said, my name is Gert Auväärt. I'm the director of the National Cybersecurity Center of Estonia. And in my line of work, our main focus is on security and resilience of a society. And we see more and more that these values, this democracy, this way of life that we are all used to is being challenged. This is not something that can be taken for granted, and we need to focus on these issues. Today's panel is called Preparedness and Resilience, and as said, we have distinguished panelists to delve into these matters. European security environment has become increasingly complex and unpredictable in recent years. And today here we will explore how payment systems and financial infrastructures are prepared to face these challenges. You have heard the developments in the morning panels, in the keynotes, and will continue throughout the day. We will try to keep the focus on the word resilience and see what can actually be done to safeguard our existing way of life. The European Union's security environment has sharply deteriorated. The Russian full-blown aggression and war in Ukraine has brought cyber and hybrid attacks against critical infrastructure, something that was agreed in the UN years ago in 2013, 2015 by the UN group of governmental experts, that this is a norm of responsible behavior in cyberspace. And one of the norms read specifically that one nation state does not attack the critical infra of another. Well, guess what, ladies and gentlemen? This is the exact first thing in an actual conflict that is attacked, and financial sector, of course, being part of this critical infra. A major electricity blackout in the Iberian Peninsula disrupted payments and cash withdrawals across Spain and Portugal. At the same time, Europe's reliance on non-European providers has exposed vulnerabilities, particularly in card payments, where in 13 euro area countries, no alternative to the global card schemes exists. Former Finnish President Sauli Niinistö has called on Europe to strengthen its financial market infrastructure and develop legislation that ensures readiness for any crisis while safeguarding citizens' sense of security. And this session here will explore how both the public and private sectors are addressing threats and how the digital euro could reinforce the resilience of Europe's payment systems. Discussion will emphasize its potential role and opportunities in national crisis preparedness and in ensuring the continuity of digital payments at member state level without reverting to cash in times of disruption. This panel will focus on key threats, including cybersecurity risks and their impact on payment resilience, financial stability, and also the ability of payment service providers to continue digital payments during severe operational disruptions. We will also cover initiatives by Baltic national central banks to safeguard smooth functioning of payments, efforts by providers to strengthen contingency measures and potential offline solutions, as well as expectations for digital euro from crisis management perspective at member state level. We have with us responsible representatives from Baltic central banks and representative of the Latvian Banking Association to share their views, experiences and plans for enhancing resilience. I will not go into the introduction of the distinguished panelists, as you have already read this when coming here, and Rainer gave a brief intro on this, but rather I would start with the substance of the matter, given that me and my colleagues are the only thing standing between you and lunch. So I will start with Uldis to my right, and the question to you to ponder upon is here. Imagine the situation in Spain and Portugal where a power outage left customers unable to access their bank deposits and merchants unable to accept payments. How are banks and private payment rails preparing for such scenarios, and what alternatives can they offer to keep payments running? What key priorities guide your contingency and risk mitigation efforts, and what expectations should we place on banks and the public sector in such force majeure situations? Uldis, please.
Well, thank you, Gert, for an excellent question. I also want to thank Governor of Bank of Estonia for inviting me here, and to the two central banks for organizing this excellent event. I would like to talk about three specific things in the context of your question, Gert. The first one is the importance of clear and timely communication. The second is the importance of training and preparedness. And the third is the importance of having the contingency arrangements and resilience ideas applied to existing payment methods and instruments. So let me tell you, by using Latvia as a case study, what is being done and what perhaps could be done in the future. So when we begin with communication, it's very important that people, especially in our part of Europe, know exactly what to do in case of a conflict. And we have published a number of brochures, how to act in time of a crisis, even a brochure on how to act in time of a war. People know that one of the critical obligations is to keep cash equal to about 1 week's consumption at home. So that's maybe question number one. Let's still not forget about cash. And also, let's communicate proactively about those type of things. I've heard from many areas, including from my own ex-banking supervisors 10 years ago when we discussed European stress tests. There were many people who were not particularly happy about publishing stress test results because they thought that that would only scare people. And paradoxically, I hear many of the same arguments now about communication, about how to act in crisis. If we communicate more about how to act in war or crisis, we would somehow make people more concerned and perhaps even trigger events which we don't want to trigger. And in my view, nothing can be further from truth. Proactive communication in times of peace, in normal times, on how to act in times of conflict, disasters, disruptions, wars, incidents is extremely important. This is exactly when you should communicate about those things. My second point is about having the resilience idea in existing means of payments. And here again, if we take Latvia as a case study, we have been working very closely with two non-European card networks in actually building in the resilience function in the payment schemes, enabling offline payments at points of critical infrastructure, so that when a crisis comes, every person can spend up to 200 euros with his or her card at any of those critical infrastructure points. And of course, buying things like pharmacy, food, petrol. I think we have reached now a point where the voluntary participation in such schemes has reached its natural limit, where we might need to have more hard legal powers to actually tell people, you are a part of critical infrastructure, you will have to prepare your systems, because of course this is not free of charge. But such functionality, I must emphasize, already exists today. Maybe we need more transparency about which infrastructure already is covered and which is not, and that is something that we could potentially consider. The third is again, a specific lesson learned from about the importance of training and preparedness, especially about the service staff working with customer-facing functions at those critical service providers, like at petrol stations, like at food stores. When the crisis comes, they need to understand exactly how offline payments function, exactly what they need to do. They need to understand that actually to execute offline payments with the current technology and setup, you need to insert card in a machine. If you don't do that, offline payments won't work. And this is exactly what we've learned from some other incidents in some other countries, that customer-facing staff did not know how to use offline functionality, even if the offline functionality existed. So training, preparedness, drills are very useful. Also, in order to raise awareness, maybe we should have a payments-free day where people will only be required to meet their daily needs with cash and see how it works and see what kind of changes to their habits might be necessary, because that moment could actually come. So those would be my kind of 3 reflections about the building in contingency arrangements and thinking in the existing payment methods, about the importance of proactive communication, especially in normal times, and also about the importance of training and drills.
Thank you, Uldis. Excellent. I already have a few follow-up questions, but I'm going to hold on to them and come back to them later. Let me first now turn to Ilse, and my question to you is, what is the status quo of crisis preparedness for maintaining digital payments and cash circulation at member state level, and priorities within the Eurosystem's retail payment strategy? Given our highly digitalized society, is it realistic to expect that we could revert to cash if banks were to go completely offline? Ilse, please.
Thank you, and thank you for having me here on this panel as well. And just to take over from all this, and so when we look at the European level today, and also from the previous speakers, we can kind of see that the 2 pillars of preparedness for payments in time of crisis are cash and resilience of digital systems. And at European level, I think we have made quite a significant progress, like Eurosystem's retail payment strategy has placed resilience at the heart of its agenda. Digital Operational Resilience Act, DORA, that became applicable in January of this year and requires banks, payment providers, and even their IT suppliers to follow strict standards of incident management, testing, recovery. Together with NIS2 directive on cybersecurity, I think it creates stronger foundation. Another important step is the instant payments regulation, which has already been mentioned several times today as well. On the cash side, European Central Bank and the European Commission have both underlined cash as a strategic fallback. Regulation is currently prepared to guarantee access and acceptance of Eurocash throughout the Union, and the ECB has even encouraged households, and that also at national level, central banks or other institutions to keep some cash at hand as emergency reserve. But at the same time, at the member state level, however, we still see different approaches and rather fragmented approaches. And so continuing the story of Latvia, then we have also we have worked on those issues for already more than a decade. And of course, 2022 was also a year when we reviewed the framework of the critical financial services, taking into account the new realm, new risks, and new situation. And we, as a Central Bank of Latvia, we updated the list of critical financial services. So basically, our priorities are access to funds and continuity of payments during crisis situations, which both of which are fundamental as it directly affects people's society's survival, trust in institutions, and economic continuity. And so we look at both cash side and non-digital payment side. From the digital payment side, one solution is offline card payments, already mentioned by Uldis, and the other side is credit transfers, which we as a Central Bank of Latvia, we develop and maintain our own clearing system, which is kind of puts us in a very good position nationally, because we can create our own solutions quite quickly and prioritize our priorities. So this is there are some fallback solutions created for credit transfers throughout Latvian payment environment as well. So as regards cash, then It is no surprise, it has been already mentioned today for several times as well, that the overall share of cash payments decreases in Latvia as well, and currently it's around 22% according to weekly statistics. But cash is still the most used payment method at point of sales. It's around 45%. And what we've done regarding to ensure that cash is available to public, so we have created regulation for the ATM network, which needs to be maintained by large banks like universal banks. Those currently are 4 banks in Latvia for normal everyday situation, and with this currently across the whole country 99% of citizens can reach ATM no further than 20 kilometers. So this is the rule for everyday network, and for severe crisis situation we have identified that we have identified critical ATMs network, and it accounts for approximately 10% of all ATMs in the country. And the map of those ATMs, we also consider, I fully agree with what was previously said on communication with the public. The map of critical ATMs is publicly available on the webpage of the central bank. And so there are what critical ATMs means is that those are ATMs that will be prioritized in emergencies, providing cash availability. So meaning that if for any reason the capacity to replenish ATMs with cash decreases, then critical ATMs will be refilled on a priority basis. Also, there are 2 specific obligations to ensure, firstly, to ensure solutions for continuous connection to information system, and secondly, uninterrupted power supply for the critical ATM network, so they are made more prepared and resilient for crisis situation. And yeah, so this is as I said, our approach is dual track. On one hand, we preserve cash as a universal fallback, guaranteeing that it remains available, accessible, and accepted. And on the other hand, we are also working on the fallback solutions for digital payments. As regards your last sentence, whether it is realistic to revert back to cash if the banks go offline completely. Of course, cash is a uniquely resilient means of payment, and the Eurosystem is actively preserving it for crisis, but full immediate reversion across a highly digitalized economy, I don't think it is very realistic. So my short answer, I see that my time is running out as well, so my short answer would be that cash would help to bridge the gap, but a full reversion is not realistic, so only partially for essentials, and at least initially. So thank you.
Coming from a very digital nation, thank you very much for the end of that answer. But I will now turn on to Veiko, and let's turn to the digital euro and its narrative in Estonia. Does the legislative proposal for the digital euro sufficiently embed preparedness by design and ensure resilience at the European level, while also providing opportunities to develop national backup solutions to maintain digital payments? What should be the key priorities?
Thank you, Kev. Basically, I think I have to come back and tell our own story about digital euro. That when this project was initiated, something like more than 5 years ago, we were a little bit skeptical, let's say, about this project, about retail CBDC, and we rather even preferred to go forward, for example, with wholesale CBDC project, which we considered more, let's say, clear value added and let's say, more fulfilling our expectations. But then this Russian war happened, and Ukraine happened, and we more and more started to understand that the importance of security in general and resilience of payment systems, how important all these issues are in our, let's say, turbulent world. And in addition of this, let's say, if we're looking at what has happened during this year, then we also more and more understand that the concept of European strategic autonomy is just not a pure political concept, but this is something which is have a real meaning, and which is important to keep in mind when we are speaking about vital critical infrastructure, which payment systems and retail payment systems are. And starting after that, we are turned, let's say, into this direction that you asked about narrative in Estonia, narrative in our central bank. Possibly the main expectations and the main reason, let's say, we are expecting digital euro is that we see additional, let's say, improvement in quality of resilience of retail payment systems. This is the main narrative, let's say, here. And when we are speaking about resilience, it's also important to understand that it's very wide, let's say. It starts from with some technical problems with IT systems in the banks or with connections, or it can be also, let's say, cyber attacks or hybrid attacks, or even the situation of war, let's say. This is important to understand when we're speaking about resilience, that how we can survive, how we can, let's say, provide critical vital services during all these cases. And now turning to the regulation and digital euro, why? It was already discussed during the first and second sessions a lot about this resilience, but maybe I will repeat in certain extent that why digital euro is providing additional resilience from our point of view, let's say. No, first of all, it's pan-European public payments infrastructure. This is already important, let's say, and this is legal tender. It's a legal tender. And this is already means that it's not comparable with other payment systems, existing payment systems, which are now in use. Secondly, which I think what was also mentioned by here during first, it's extremely important which this functionality of switching. Switching using digital app or emergency switching, which is already in the legislative proposals included. That basically, if you already have digital euro, you have service provider, but you can switch easily from one provider to other, and this is very important in case of interruptions or disruptions of the services. And third, which was also mentioned already several times, which is a clearly new quality from point of view of resilience, is offline, universal offline, let's say, possibility and functionality. In circulation, not just, let's say, like we have now, like in Latvia, we have also in Estonia that this card payments up to certain, let's say, ceiling can be used, offline payments in critical vital services provided places. But finally, then the question is that what is still our expectations that in addition to these already three very important, let's say, components, functionalities, we are already in regulation. We need also regulations, in regulation possibilities for the national member states in emergency situations, in extraordinary situations, to have these backup solutions. This is something which is still, under discussion in the council working group, but which should be included, which gives member states opportunity in cases where the other measures are not effective to, let's say, have flexibility of using, let's say, designated providers, for example, or, let's say, having also flexibility what concerns limits and temporary. This is something which is, we are expecting that also will be discussed during the regulatory when this process will take place in working groups and on the council level and later on also in trialogues. This is something which I want to emphasize, but yeah, these are. But the key priority is finally to agree and to pass the regulation. This is a key priority. And all these questions which have discussed, it's possible to solve. We already have, let's say, compromise agreements already concerning holding limits. Maybe, yeah, so the question about costs and let's say compensation model is one of the most complicated what is left. I will stop here. Thank you.
Thank you very much, Veiko. And last but not least, I will turn to Evaldas, and my question to you goes as follows. Let us consider how the Digital Euro project can deliver on the expectations raised. What role do you see for the Digital Euro in enhancing the resilience of the financial system, supporting crisis management, and strengthening trust in banks by providing an alternative digital means of payment in the event of disruptions, ranging from technical glitches to hybrid attacks?
Yeah, thank you. Thank you for the question. And to be honest, I think the question has been answered already multiple times today, because this resilient topic is coming up many times on different speeches and panels here. Nevertheless, I would like to offer a bit different perspective probably on resilience. If I take back the very general questions, what is a resilient system, right, as such? So resilient system is the one which ensures that money flows in the society no matter what happens. No matter is it a cyber attack, is it a power outage or any other adverse event, still the money is flowing in the society, right? So that's the key goal of the resilient system. And when we're looking more broadly how the resilient systems are being built, so in general, probably IT companies are the best in building resilient systems of their own, right? And the basic principle, the way they build those resilient systems is they build one infrastructure, And then they have the backup infrastructures. When the first infrastructure fails, or one of the infrastructures, the main infrastructure, is failing, there is usually a seamless switch to a different infrastructure, right? So that's the basic principle of it. And what we should do, in principle, in the financial system, we should also build a similar approach, similar system. When one infrastructure is failing, we should have the possibility for people, for businesses, to switch to a different infrastructure as such. And this is exactly what digital euro is bringing. It's being built on a different infrastructure. It means how my colleagues were saying that additional features are being built but they are still being built on the same infrastructure, right? No matter how resilient one infrastructure is, if there is no alternative, the whole system as such is not as resilient as it could be. So that's my main argument. What I also hear is that cash is that alternative, right? But what we tend to forget that currently, especially here in the Baltics, access to cash is also completely dependent on international card schemes, right? When my colleague Marius was sitting here and saying that when the war started, there was a lack of cash and the ATMs were filled in. Nevertheless, we tend to forget that the access to those ATMs, again, was built on exactly the same infrastructure. So if that infrastructure fails, we don't have even an alternative to access cash. Only that little amount which is available in the drawers is available for the population, right? Which, in my deep belief, is really not enough to keep the system up and running, to keep the system flowing, right? So yeah, so the thing is that the way I see it is that digital euro, even without any single additional feature, which we discussed, and Veiko just told those additional features, even just bringing a separate infrastructure already builds a lot of resilience into the system as a whole. And that is an important point which we tend to forget, that we are talking about features. Will it be from day one, day two, how it will be implemented? They are all very important features. But the most important thing is that digital euro brings an alternative infrastructure. When one fails, people can switch to alternative one. So that's the main point. But of course, I don't want to diminish the value of those alternative features, which is offline functionality and switching possibilities. So those are, of course, very important, and they add a different layer of quality to the resilience as such, right? So of course, there was a lot of talk about it. I really don't want to dive deeper into those functionalities, but they just add additional features to the resilient system which digital euro is building by itself already in the finance. Nevertheless, there is one more important aspect of building a resilient system. So we are talking a lot about the features, how it will be built, but the key thing is that is the usage of digital euro in the society. Because if, let's say, less than 1% will be using digital euro after it is launched, right? So can we call it really, what will we do? We will start onboarding customers when the power outage is there, or when the war starts, or when the cyber attack starts. Probably that's not viable solutions to start onboarding customers, going through all the procedures, right? So the usage is also very important part of the resilient system as such. We cannot say that we have a resilient system just because we have a theoretical and practical alternative which can be implemented in, let's say, a few weeks' time. It can be distributed in the society. Society has to already get used to this means of payment. They have to start trusting it, and that's why the distribution itself, the usage of digital euro, is equally as important as all the features that there will be on digital euro. So I think all these aspects are really important on how to build this resilient system, resilient payment system, resilient financial system, and yeah, thank you for that.
Thank you very much, Valdas. Before I go to the next round of questions, my question is to you, distinguished panelists, all four of you. whether you picked up on something that your colleague to your left or to your right just said that you would love to build on, and if so, indicate with raising a hand, please. If not, I will continue, and I love doing monologues. But one thing that immediately popped to mind to me when listening to you all was the whole focus on when the sort of the internet is down. That era or that specific niche is covered very well by all of you for that what to do then if we can't access it simply. Well, that's one possible spectrum of the hybrid attacks that we see now in Europe, but the other one is that simply the financial institution has not done their homework well enough, and that their technical systems are not up to the level that they should be in 2025. Their investments to that field are not sufficient. They don't have a sufficient information security team. They don't have, or they might have plans in place what to do, but they have not tested them in real time to see if the alternatives actually function. I mean, me personally, I've been in at least 3 times during the last 12 months in a shop, in a grocery store, tried to pay for my groceries, and it's impossible because the systems are down. Then I take my other bank card from another bank, same problem. And so that has nothing to do with the fact that the bank has or does not have internet. It has a lot to do with the fact that cyber criminals and cybercrime being the 3rd largest economy on planet Earth, and they invest in this day in, day out, and with the difference from the banks, they work 24/7. Their staff is functioning every day, every night. There are no borders. So this is my question. How does the digital euro help us? How do these new initiatives that you have thought of, which I commend you, and it definitely does help with resilience, but I'll go in the same direction. So if you can build on this shortly, and then I go to the follow-up questions. So Uldis, please.
Yes, well, thank you. I think excellent example. In fact, if one thinks, as a scientist, one immediately considers that, there's a total alignment of interests. The banks should be totally interested in protecting their customers against fraud. And why is then there a problem? Where is the market failure? And market failure perhaps is then in the question that those investments might not be sufficient. And for that reason, of course, we have the first line of defense is always the bank's management. They are people who are mandated by their shareholders to ensure that they meet their customers' expectations and demands in all situations and that they have robust systems. Now, what if that fails? Then you have the supervisory board. They bring additional perspectives. And then, of course, we have European Central Bank, which is responsible for supervision. It is direct responsibility of the ECB through the SREP process, through the assessment to make sure that the management of all risks, including operational risks and cyber risks, is done up to the standard. And if not, there are plenty of possibilities. As a former supervisor in 3 countries, I can assure you that there are plenty of mechanisms that supervisors can use to intervene in such situations. Now, how the digital euro would change that situation, I would say we need to be aware that, of course, it will add complexity. It will undoubtedly add complexity to the situation that we currently have, but it doesn't take away those basic things. The need to ensure that banks can, under all circumstances, provide services to their customers, not let them down, and making appropriate investments in people, technology, and processes to ensure that they are robust and function under normal times and also during crisis.
Thank you, Ilse. Same question, but with extra caveat. You talked about cash and how that helps, and you talked about the examples that Latvia has done in making sure that these ATMs function, that the circulation is there. My question to you is, what will people do next? I mean, if everything is down, they take the cash, they go to the shop. Does every shop in Latvia accept the payment, write it down on paper if the Kassa system is down? If they can't digitally enter any of those purchases, how can these people then use this cash? But the original question as well. Sorry to make it complex for you.
At first, just to follow a bit up on what Uldis just mentioned regarding the contingency planning, we have also for critical financial services, we have created like additional contingency planning and also additional regular testing for that. We do annual tests, and then but we always start with scenarios, and this is coming back to your amended question that it depends, of course, on scenarios. So every solution, every preparedness solutions crisis solutions depend on what we look at. So those critical financial services are made for rather severe scenarios, and of course so it means that for the readiness of the merchants, we still have some work to do in Latvia. We have introduced those solutions with the merchants who were ready and who are covered the most part of specific areas like food, fuel, and medicine. But we have still way to go, of course, and this is a valid question that merchants should do their homework as well.
Let's leave the host country last and turn to Lithuania first.
So answering your question on the cash itself, just adding to that. So of course, financial system cannot ensure that the country in general is operating, right, as such. So that's financial system can do as much as possible. So if the doors of the shop is not opening because they are electronic and there is no possibility to open it manually, there is so much that financial system can do, right, if the customer cannot enter the shop. Nevertheless, our responsibility is to ensure that the financial system works well when all the other factors are working also. And at least in Lithuania, so all the sectors are preparing. It's not only that financial system is being prepared, it's all the sectors. The shops are being prepared for those scenarios. The supply chains are being prepared for such scenarios. So it's not only about the financial system, it's much wider than that.
From my perspective, and sorry to again bring you to security, but that's just I live and breathe cybersecurity day in and day out. The financial sector is actually doing quite well if I compare it to other sectors. You have had these regulations, you have had ECB, you have now DORA, you have had all these rules that you've had to follow. But guess what? You are the financial sector. That's where the interest lies, because again, cybercrime being the third largest economy on planet Earth, I keep telling my two sons at home day in and day out that study hard, then you will succeed in life. Well, there's a large part of societies on planet Earth of groups of people who don't do this, who don't go to work, who never wear a tie and still manage to live their life through cybercrime. And financial sector being one of the main targets of them because simply you circulate the finances. But Veiko, sorry for this curveball in the beginning, but same thoughts, same question. Any reactions to your colleagues?
Yeah. A lot already was answered by previous Uldis, and usually when we're speaking about why banks or financial service providers are not ready to provide services on the level which is expected and which is resilient, let's say, it's a question about let's say, regulation, supervision, and competition. Let's say this is something which should be, let's say, used. But which concerns digital euro, and already before there was a message that probably Uldis referred that what is message of our, let's say, of the government or let's say central bank to the people using payment services, that you have to have 1 week cash use. You should have at least 2 different cards providers, but then when we have a digital euro, we probably will have, our recommendation will be you should have a cash, but you will have one digital euro, let's say, card, because you can switch easily between providers. So it means this is a different, let's say, story. And this was your question about what will be different in case of digital euro. This is something which will be different.
Thank you very much. I have a question to Uldis. Are there any relevant lessons learned from countries that are more advanced in the introduction of CBDC from resilience and preparedness perspective?
Well, I think the paradox here is that countries which are more advanced in the introduction of the digital euro are probably in the developing world. They either are quite small economies which have already introduced central bank digital currency, or they are quite big economies like China and India which are experimenting on a large scale. And I think a couple of things. First, I think it's important for us in Europe to be very clear about what objectives we want to achieve. And it seems that in Europe, our primary objectives are slightly different from those in other countries which have probably been more advanced. Maybe financial inclusion is important, but not that important. I think when it comes to innovation, yes, an objective, but not maybe the objective. So what are then important things in Europe? And I think we come back to this question about sovereign autonomy, and from that perspective, it is very important that when we design those objectives, these objectives come first, then come the features of digital euro, which we want to see, and then come the cost. I think one item that we have not discussed here is the cost. I think it has been mentioned that there are studies, and I think PwC has done a recent study estimating that the implementation of digital euro, and only in relation to banks, not in relation to merchants and everybody else in ECB, can cost up to 18 billion euros. This is a private sector estimate, so I think from that perspective it would be very good to see public sector estimates, and in general I would say more transparency about the impact assessment. And from that perspective, of course, you can think in terms of different functionalities which are being discussed, but my point is that these different functionalities cannot be discussed irrespective of the price consequences. So when you discuss what kind of features you want to have for your own central bank digital currency, you have to think both about the features and the cost not only to ECB or to merchants, but also cost to banks, cost to other users, because ultimately there will be a cost. So the fact that your purchase will be free of charge for the customer doesn't mean that there are not going to be any costs. And finally, I would just want to make another remark that what has been mentioned earlier about discussions about the impact on financial stability. It is very important. It's very important to see this not as a static game, but as a dynamic game. Because, of course, it's very important to see how this maximum holding limit is designed. And, of course, there have been studies that have shown anything in between 5 to 10% of deposit loss, but these are very uncertain estimates. But, of course, in addition to that, the banking system will be affected through also potential loss of revenues, depending on different scenarios. So having a robust impact assessment, and also thinking about the political dynamics, because we are now all in agreement that digital euro will not bear interest. And of course, that's an important feature to ensure there are no negative short-term impacts on the banking structure as we know it, that we don't destroy the banking system by doing it. But then think about later, what happens if the regulation is adopted, if the decision to introduce digital euro is adopted, everything is going on, and then suddenly you have a populist party which says, why don't we pay interest on digital euro? It's good for people, And so these type of scenarios, I think, should be taken very seriously at the outset, because this is a dynamic process. So that would be my invitation also to be ready to think about the worst case scenarios, because I still remember that morning when I woke up after Brexit and I thought this could never happen, and this happened. So be very thorough with impact assessments. Thank you.
Thanks to Ilse. In a crisis, how can the digital euro reinforce Europe's independence in critical payments?
Yes, I think this issue has been covered during the whole first part of today. So just to sum up, that digital euro would strengthen Europe's strategic autonomy. It would really reduce reliance on external providers. It will provide crisis-proof complement to cash and current digital payments. So together, these elements make Europe's payment system more resilient, more independent, and ultimately more prepared for the unexpected. But to finish the answer on the more philosophical note, I'm very much interested into the development of historical development of central banks, and we all, or at least most of us who come from the central banking part, know that the reasons why the central banks were created, and so it was to ensure money unified, stabilized, to unify and stabilize fragmented systems. So basically, if we look at the large-scale digital euro, can also be seen as the next step in ensuring monetary unity, sovereignty, and trust in digital environment and digital economy. So this is just to draw lessons from the 17th till 19th century.
Thank you, Ilse. To Evaldas, are existing offline card payment solutions sufficient for crisis scenarios, and what added value would an offline digital euro bring, and why is it needed from the beginning?
Yeah, so offline solution is an important step and in the very right direction, right? So it adds resilience to the current means of payment. But as I said in my first intervention, nevertheless, it strengthens or makes more resilient one type of infrastructure, right? When we look, and it's important, of course, it's very important to strengthen as much as possible the currently available infrastructure to make it more as resilient as possible. Nevertheless, the resilience of financial system as a whole cannot be achieved by such small steps improving just one infrastructure. That's why we argue that additional infrastructure with digital euro is needed when you look from the financial system point of view, not from the certain infrastructure point of view. So as I said, it's a good step we encourage, but again, it has also those features which are limiting the usage of that. And I believe in Lithuania the usage is mostly limited because, for example, it is applicable only in a specific legal environment when a state is more or less in a pre-war condition already, right? So only in those cases offline solutions would be available to the society. So it's really limited in usage, and again, it will be limited to certain types of goods and services, to certain shops. So it's quite a narrow in its implementation itself. So yeah, just to emphasize, it's a good step in improvement, but it doesn't change the whole resilience of the system itself much.
Thanks. My last question of the day to Veiko. Where should the line be drawn between the responsibility of private providers and the role of the euro system and public sector in ensuring resilience and crisis preparedness?
Yeah, thank you. Basically, I try to be short to leave room for questions, but it's ordinary situation. Public sector is responsible for regulation, supervision, coordination of vital services provision, and for national emergency solutions. This is the role of the public sector. All the rest relies on the private sector. And what is important to understand that Digital Euro project is not a public project, it's a partnership project. Public and private sector is providing this solution together in partnership. And this is very important to keep in mind. And I want to refer what Uldis said about the cost and possible estimations that we cannot estimate the cost taking into account that these are from the scratch, from the zero point of view. We should assess how the different solutions exist together, what is interoperability, what is, let's say, synergies between, let's say, solutions. And this is, when we're speaking about the cost, this should be taken into account. Without that, the picture is misleading. Thank you.
Thank you. So now the audience, please. Any questions? Start here in the front. Can we have a microphone?
Hi, thank you for a very, very interesting discussion. My name is Chris Crespo from Nordic FinTech magazine. Earlier this year, I had the opportunity to interview Alexei Shaban, Deputy Governor of the Bank of Ukraine. And given the fact that a lot of the risks and the scenarios that we're discussing here in this panel are the ones that Ukraine has already experienced, my question to you is, what can Europe learn from the response that Ukraine has had with things like power banking, migration to cloud infrastructure, local power supplies, that could help in a situation like the one that we're describing between now and when a potential digital euro be available?
Uldis first, and then Veiko wanted to add.
Very briefly, so first of all, it is really a unique achievement by Ukraine to have its financial system running in these extremely difficult circumstances, so they should be praised for all they are doing. I think I would want to emphasize very shortly three things. One is the importance of working extremely closely between the central banks and commercial banks and other infrastructure providers on finding common solutions. And I think that is highly relevant, especially to this stage when many crucial design features of digital euro are being discussed. It's important that there is a very close dialogue. That's number one. Number two, I think active dialogue with existing payment providers, including non-European card networks, has been very crucial to ensure financial services function successfully in Europe today. So the cooperation by Visa and MasterCard has been extremely important, and my understanding is it has worked well. And maybe the third point is importance of ensuring different kind of redundancy solutions, including cloud. And I think there, Europe can learn a lot from Ukraine. Thank you.
Thanks. I don't know, was it Evaldas or Veiko who wanted to add?
Evaldas.
Evaldas, please.
Just to add up, not to repeat what Uldis was saying, of course we're drawing up from the lessons from Ukraine, and what they are saying that one of the most important lessons was the short-term disruptions in the network, in the communications, right? So that was the key. It was not like all the system is down for a week, let's say, or so, but for an hour, for half a day. So these disruptions are quite common in such cases, and that's exactly why those two functionalities, we can say the offline functionality of digital euro is of the primary importance, and offline functionality in card networks, which is being built now. They both address the same key vulnerability. That is exactly drawn from the experience from Bank of Ukraine.
Thanks. Final question, because we're running out of time, from the gentleman here.
I'll try to be quick. So the panel has brought up the question about financial inclusion, and that some countries, for example, African countries, have this problem, and they're introducing CBDC for that reason. But I believe that we also have this problem in Europe, probably to a smaller extent, but we have some countries like Italy, for example, 3% of people without a bank account, and also with Bulgaria joining the Eurozone soon, where also a significant amount of unbanked population lives. So I wanted to ask, like, how can the private and public sector there collaborate also to plug this inclusion gap potentially with the digital euro?
Any reactions?
Yeah, we probably don't have a huge problem with inclusion here in the Baltics, right? There are very little percentage of people who are unbanked as such, right? So that's why it's hard to react for us to the issue itself. But nonetheless, if it is the question of trust, right? Why the trust in banking system as such. So digital euro will address that topic, because it builds on the public money. It builds not on a commercial banking system, but on a central bank money. So that if really the inclusion is the problem of trust, so that's how digital euro should address it.
So Ilse, followed by Uldis.
Yeah, just to continue that at least in Latvia, there are at least the young generation uses internet like 99 point something %, and more than 90% use digital banking on every day. So there is doesn't seem the problem for the future, but of course the digital euro solves the financial inclusion problem as well, because there are different functionalities and different approaches there embedded in the solutions.
Yeah, I just wanted to clarify that we do have a problem of financial inclusion in the Baltics, of course, and in Europe in general. Even in digitalized societies, we still have elderly people and who sometimes expose themselves to cyber risk because they often even ask their relatives to help with internet banking, and we know how it works in practice. But also we have, I would say, a quite close link between financial inclusion and financial literacy, because when we come to more complex products, I'm not sure that all people understand them. We recently talked about that the European strategic autonomy is not only challenged by potential, US tech actors and other central bank digital currencies, but also by stable coins. And how many people understand how stable coins work? Okay, or how the new EU regulation for digital assets, MICAs, operate in practice. I'm not sure that this percentage is quite big. So from that perspective, yes, inclusion should always be high on the agenda, even if it may be not the primary kind of highest level objective. It still is an important objective.
So now 15 seconds from each. Most urgent action needed next, starting with Veiko.
The most needed action is just to let's pass this regulation. What concerns important things here in our countries and Europe also, then is a full implementation of DORA. And of course, we continue with our, let's say, our own measures what concerns offline card payments and other things which is already in place here.
Thank you, Evaldas.
So we already said the most important one. This is to make the decisions. But after that, I would see that the next one is to start a deep engagement between central banks and commercial banks and fintechs in order to dig deeper in how we are going to make it happen, how we are going to make it live. And this engagement will be key between the market players.
Thank you. Ilse, please.
So on more general note about the societal resilience and preparedness, which is one of the issues I'm currently working on, I would say that, at least on my table, the most crucial issue is to kind of codify or structure minimal national baselines for crisis readiness. And yeah.
And Uldis?
Yep. Very shortly, I think digital euro is not a panacea for resilience. We need to continue working on all other things we can do to strengthen our resilience. Secondly, what happens between now and December is important. If we can reach political agreement on digital euro, that's something that industry would be very interested to know. And of course, industry would be ready and very keen to participate in those discussions up to December, because many of those choices which were mentioned that still need to be made about design of digital euro are quite important. So involving private sector in those discussions can only improve the quality of the outcome. Thank you.
Thank you very much, and sorry for stealing 3 minutes of your lunch.
Thank you, Gert. Just housekeeping before you stand up. Lunch is served standing buffet lunch in the lobby, and also upstairs there is a seated lunch. Just to manage the queues, distribute well yourself, then it's quicker, you have more time to eat and discuss with colleagues. And for the speakers, there is a designated area upstairs. And now we will resume exactly at 2 o'clock. And I think the panel already started with some questions related to implementation, and we will look also into the future, what digital euro can enable in terms of innovation as well. Thank you. Bon appétit.
can you imagine the digital euro in your daily life? With its innovation platform, the European Central Bank brought together retailers, fintech companies, academia, banks, and other payment service providers to explore new ideas for the digital euro and see how it could impact our everyday life. Here's what they say the digital euro could look like. Early in the morning, you jump on your train. All you do is tap your phone, even without network reception, and get the best possible fare for your route calculated after your trip. At noon, you return the gift you bought for your friend because they didn't like it. Fortunately, your receipt is safely stored in the digital euro app and available with one click. Dinner time. You order from your favorite restaurant. Your money is taken out of your account only after your meal is delivered. These ideas show how the digital euro could benefit people in their daily life, help public and private organizations work better together, and bring new solutions and services in Europe. The digital euro would make payments in the whole euro area fast and easy, making life better for us all.
Ladies and gentlemen, welcome back from lunch here in the room and also people watching the live stream. I hope you had a nice lunch and now we have the difficulty of keeping everyone awake because after lunch it's the usual case. But hopefully we will be discussing about such topics that will wake you up. Huh? But let's see. Now, let's move to the third panel, the fit of digital euro within the European and Baltic ecosystem. And for this panel, as the moderator, I would like to call on stage CEO Pereira. She's the team leader working on digital euro at the European Commission. Please join us on the stage and take a seat. As panelists, I would like to first invite on stage the CEO of LHV Bank and the chairman of the Estonian Banking Association's Council, Kadri Kiisel. Second, from the European Payment Initiative Company, the chief member and strategy officer, Ludovic Francesconi. Third, a member of the European Economic and the Social Committee and Vice President of the Lithuanian Consumers Alliance, Kęstutis Kupšis. Fourth, from WISE, the Product Director leading UK and Europe and its infrastructure for payments globally, Lars Trunin. And the last panelist will be myself, so I will also sit in the panel and give it over to CEO, please.
Thank you very much, Rainer. Good afternoon, ladies and gentlemen. I'm very pleased to be in Tallinn. And I would like to start by thanking the Central Bank of Estonia for doing me the honor of inviting me to this conference and to moderate this panel, which I hope will be interesting. This is a panel on the fitness of the digital euro in the European and Baltic ecosystem. The Baltic region is known for its highly modern and efficient digital payment solutions, where instant payments have already become the norm. I could experience this myself as a tourist over the weekend here, and even buying fruit at the market could be done without cash in my pockets, unlike, I must say, my own country. Users trust digital payment solutions, and in a word that cannot keep still, as Mr. Cipollone put it very well this morning, banks and other PSBs have no alternative than to invest and to keep innovating, to keep up the pace. The Baltic region is indeed home to many well-known European fintechs and unicorns that we use on almost a daily basis and that we are proud of in Europe, like Skype, Bolt, or Wise, to quote just a few. Yet, strong dependence from global players persists, as was abundantly highlighted today, despite this this thriving fintech scene. I could see myself in the terminals that Visa, MasterCard, Apple Pay feature prominently. In that context, there seems to be space for European alternatives, be them private or public, that align with these digital trends to reduce reliance on these global players. We certainly live in uncertain times, times at which payments can be weaponized, and that has led governments and central banks to seek autonomy through parallel infrastructures, such as the digital euro. And against this backdrop, the question arises, how do we introduce something really new and, dare I say, revolutionary, like the digital euro, into an environment that is already thriving, but also in a context where payment infrastructures have become instruments of geopolitical leverage? Today's discussion will take a practical and strategic angle. We will explore alignment with existing infrastructures, the challenges of integration, and the potential gains for the wider ecosystem. The issue is not only technological, but also deeply linked to Europe's economic strategy and sovereignty. The digital euro, if designed well, that's what we will be speaking about a lot in this panel, could become part of this broader strategy, a horizontal enabler that modernizes payments, supports competitiveness, and strengthens Europe's autonomy. So with this in mind, let's explore how can the digital euro coexist with and usefully complement the systems already in place while contributing to Europe's long-term competitiveness and also resilience. So today we have a very well-composed panel. I'm just sorry that the gender balance is not great, but nevertheless, I think that we will do a good job collectively. And we have in this panel users, representatives of users. We are all representatives of users, but we have someone here who is perhaps even more expert than us, representatives of the supervisors or overseers, and of course of the industry, which will have a key role in the delivery of this project. So I will ask next to the panelists to briefly introduce themselves before we proceed. As for me, I'm Seu Pereira, and I lead the Digital Euro team at DG FISMA, so Financial Services, Financial Stability and Capital Markets Union of the European Commission. Like, dare I say, Obelix that fell into the magic potion, at an early stage of my career, I fell into the magic of payments, even when the topic was viewed as boring. I think today, one can see from the many discussions around the digital euro that the topic is everything but boring. It is even somewhat controversial. But let me give the floor to my fellow panelists. so that they can indeed briefly introduce themselves. And perhaps ladies first, I will give the floor to Kadri.
Thank you. I'm Kadri Kiisel. I'm the chairman of the management board of LHV Bank in Estonia. I've been in the banking industry for 15 years. Previously, no years. So basically, my banking career started in LHV. And also, I'm the chairman of the advisory of the Banking Association in Estonia. But I think that I would reflect myself as face of the customer today, because most of my time in banking sector, I've been in retail banking area. So basically customer experience and everything that customer wants, how to create value for the customers, this is something that I deeply care about. So if we talk about digital era today, then I think that I can definitely reflect on the customer side. So what could be the value created for our region customers in this project? So thank you.
Thank you. Ludovic, please.
Good afternoon, everyone. So my name is Ludovic. So I'm at Epi Company, but you can just think about Wiro, which is the brand of our product. I'm in Epi Company. I'm in charge of development and strategy. I am French, unlike my name says, but and I was previously working at the French domestic card scheme, Carte Bancaire, so almost 20 years in payments.
Yeah, hello everyone. What I want to say about myself, because in the morning I already introduced myself a little bit. I'm also working on digital euro heavily. I'm also sitting at a high-level task force developing digital euro. So hopefully I have a nice overview what is the design, what we want to achieve, and how it may impact also the Estonian market.
Good afternoon, everyone. I'm Lars from Wise. I'm a product director there. Rainer already embellished the introduction with titles, but I thought I'd say a few words about Wise. For those of you who don't know, we try to help people move money around the world. Today, we move about 170 billion euros from one country to another every year. And most interestingly, I look after the payments infrastructure globally. That makes basically money move from one point to another as quickly as possible. But in addition, perhaps what's relevant for this conversation is I sit on the board of an organization called Pay.UK. They're basically the equivalent of EBA clearing, but in the UK, they move about 10 trillion pounds of people's money between businesses and people, salaries, pensions, direct debits, etc. And there I represent the small banks and the fintechs in the UK community and have a good opportunity to compare what's happening there with what's happening here in Estonia, here in Europe, and globally overall.
Good afternoon, friends and colleagues. I'm Kęstutis Kupšys. I represent here civil society, a non-governmental, non-profit sector. And I'm part of the Lithuanian Consumers Alliance. We established this umbrella consumer organization back in 2012. Also, this LCA, the alliance, is part of the BEU, the European Consumers Organization, that many of you definitely know. And also, I serve for the 2020-2025 term as a member of the European Economic and Social Committee, which is advisory body to the European institutions. Glad to be here, and thank you for the invitation.
Thank you very much to all. And it is then time to deep dive into some of the topics that we'll mention now. First, it will be about the fitness of the digital euro into this already crowded ecosystem and value added. Second, then we will turn to regulatory and operational considerations, and we will finish with a discussion on incentives and partnerships. I believe that the panel, as you may have seen, is ideal to discuss these topics. So, and on that vein, I cannot imagine a better way to start than to give the floor to Rainer, who first has played a key role in organizing this conference, of course, but who is also at the very heart of the policy making and regulation of the market in Estonia, who knows the market well. And I would like you, Rainer, to tell us about how the Central Bank of Estonia assesses the fitness of the digital euro into the Baltic region's digital infrastructure. What gap exactly is it intended to fill?
Mm-hmm. I will try to do it and not repeat everything that has been already said in the morning, because Veiko already started also that how our narrative has changed from the start of the road up until now. In Estonia, we have really good payment solutions. Digital payments are close to our heart, and we use them on a daily basis, and customers appreciate them a lot. But when I'm reflecting now about the gap which digital euro would fill, and now talking in the role of authority coordinating the continuity of vital payment services in Estonia in a crisis, we have learned that banks are investing a lot into resilience. Banks are also investing in backup solutions. We have also understood that there is a limit to which extent banks can do those investments. And in the morning, we also were talking about the expectation of the society on the public sector and the central bank. So if banks' services are disrupted, then people expect an alternate solution. Yes, cash is currently available, but we also talked about the issue that the availability of cash, if bank services do not function, it may happen that people cannot withdraw cash either. And we have given the guidance that hold some cash with you, but if they don't, then they don't have anything. And also, just at the beginning of the month, we had also these disruptions in card payments in Estonia. And then I was reflecting, so how much harm does this disruption do? And I took the annual value of card payments at point of sale. And then if I divided it to 1 hour, it's 840,000 euros in Estonia only. Just imagine 1 hour disruption in the euro area. This is already hundreds and hundreds of million euros. So this is the impact on the economy, on the digital economy, because indeed, in the physical stores, people go and buy food, but how many services they will not use, and what's the impact there on the businesses? And there they expect something in addition, and the gap that we are then filling in today's world is with the public service, which is the digital legal tender. We offer cash, but in the digital economy, we then offer a digital legal tender that would function when bank services do not. And we have put measures in place to make it happen. In addition, at the physical store, the offline, which we talked about, this is also something that actually the private sector cannot do, but the society would demand in times of crisis. We have to give assurance that digital payments can continue. I like the symbol that we have to be able to stand on our own feet, not rely on others. And this is why we are doing it. We cannot expect the banks to fill this gap. We have to do it ourselves. And but digital euro would not be only used for payments when bank services are disrupted. Digital euro has to be used on a daily basis as well. So this is where, in principle, digital euro also complements the bank services, enabling consumers in Estonia to pay also wherever in the euro area, and vice versa. Let's take Vero customers in France can come to Estonia, use their Vero app, and pay in the supermarket, while digital euro is moving from the merchant to the merchant. So this is how digital euro will actually ensure the pan-European reach at the merchant side, because in the regulation this will be compulsory to accept by all merchants. And maybe one thing which is provides a little bit confusion in the market is what do we offer from the Eurosystem with the public rails and infrastructure, and what do we expect from the banks? We will offer the rails to move money, digital euro. We will also offer the payment app to which banks can connect their existing systems. Yes, banks have the option to develop the apps themselves, but they don't have to. Similarly to us printing money securely and ensuring security, we will also do the digital euro app. And private solutions can also offer the same to the banks, for instance, like Vero. With Vero in the future, I believe, and this is the expectation in the retail payment strategy of the Eurosystem, that all the pan-European solutions would also facilitate usage of digital euro as well. And I have understood that this is in the objectives nicely. So for the customers even, using then the Vero app for instant payments today, they don't need to start changing to the digital euro app. They could just continue using the Vero app. So, but the key issue in Estonia is that we don't have a national solution. And we have such a small market that there is no business case for building a national payment solution for payments at the point of interaction or point of sale in the shops. So I think that's the issue. And then for us, the digital euro would actually solve this. The digital euro will be done for the entire euro area, and we will just leverage on it and be able also to build our national backup solutions just to ensure that digital payments can continue also in case of bank services outages and for daily payments. Thanks.
Thank you very much, Rainer. These were very interesting points on how this project can support also the private sector and the society as a whole, because as you said, there's a limit to what banks can do, because sometimes there's no business case, and because you increasingly need redundancy and resilience, and therefore the digital euro could support all of these goals. But now turning to Kadri, we have heard a lot about the weight and, dare I say, the dominance of international card schemes in the European payments market. Do you think that the digital euro could shift somehow the balance of power with the international card schemes? And what would it take for banks to gain real leverage?
Mm-hmm. Thank you. I think that the digital euro scheme actually do have some kind of optimistic view if we talk about getting some kind of alternative for the non-European payment schemes. Nonetheless, it should be considered that the power shift only happens if commercial banks in Europe actually have the key role and motivation in doing that. So, for example, if we just build a scheme and there is a possibility for non-European big techs just to take over the customer base, then of course it won't happen. So because the motivation for the commercial banks should be very well defined in the whole scheme. So that would give some kind of first steps, for example, to understand if the power shift could happen. Without that, the European banks are on board and understand what is their role, what is their motivation, is there stability, understanding how the new scheme will affect their everyday work, then if the understanding is not there and the liability is blurred in some cases, then I don't think that the power shift will happen.
So clearly a word of caution as to indeed the impact of the digital euro. We must get it right so that it complements existing payment solutions without crowding them out.
Yeah, exactly. And if I may add, then I don't think that it's reasonable to think that the digital euro will actually solve all the problems. In case of emergency, in case of instability, in case of resilience, in case in countries where basically maybe there are not so well-established digital payment schemes or payment solutions, for example. I think that the problem should be defined in narrower scope. What is the problem that we are trying to solve with the digital euro? Because we cannot solve everything. If we want to solve everything, then we probably will have just a very costly system that actually don't solve any of the issues. So that's my point of view. Yeah.
Thank you very much. Indeed, the digital euro cannot solve everything, but it can help to solve a few problems that we have. And we can also hear the voice of consumers in this regard. Consumers are used to fast and convenient means of payment. Do they really need another digital means of payment, such as the digital euro? And do they even understand actually the difference between the digital euro or public form of money and private money?
Yeah, thank you. So it was fascinating to listen to all the conversations this morning, and I was carefully listening to see if there is someone pronouncing that sacred phrase. And that sacred phrase was a tool in lobbying for the whole banking industry for the last few years. And probably many of you have heard it. The digital euro is a solution looking for a problem. And I think what Kadri just said a few moments ago was very close to that. But without this very clear formulation, this solution kind of looking for a problem was, I think, a very, let's say, powerful and indeed quite successful tool in shaping the digital euro architecture in the last 2-3 years. But definitely, we need some evidence to see if there is a problem, if we need this, besides the very abstract issue of private versus public money. So, my umbrella organization just published last week results of a representative survey. And that's 10,000 consumers in 10 countries. So that's a survey by BEUC, the European Consumer Organization. You can find it online. That's quite fresh paper. And actually, we asked the consumers. We also asked teens and adults to understand their preferences separately, to make still the representative picture of 10,000 people in Europe. What are the aspects they value most in digital payments, and what would they value as crucial features if a new digital form of payment was to be introduced? So it's not asking about digital euro, because digital euro is still in the preparation phase. You cannot ask about something which is not yet existent. But we tried to shape the question in a way that it's relevant for the people. So 3 most important aspects: secure and reliable payment means, easy to use, and very low or no fees. So security, ease to use, and no fees, very low fees. Because, next question is, why? Why would that be important? Because half of the consumers experienced difficulties, some difficulties, from technical errors to security concerns, lack of skills, And that's what half of people say out loud when they are asked about the existing digital payment solutions. And also, approximately 40% of people we asked said they sometimes help others to master the digital payments. I mean, this statistic is quite telling about the actual situation in the whole payments landscape. Still, 85% of people say they would like to have cash continuing as a means of payment. So 85% would still love to have cash. And now, on the basis of these survey results, we developed a set of recommendations. I think there is not so much surprising for you to hear, because that's an audience of deeply engaged in the topic professionals. So, of course, digital euro should be easy to use, secure, ensure strong fraud protection. The digital euro card should be offered free of charge. That's also coming from the results of that survey. And it should have also strong accessibility features. Now, there was a talk also this morning about how to ensure financial inclusion. And on that need of people to ensure inclusion, to ensure ease of use, I'm building my own vision, that essentially digital euro should be your right at birth. And I mean, we get used to cash from the first days of our life, when we start walking, when we start engaging in economic transactions with the world. Now, why digital euro should be somehow different? I would envisage that actually every European at birth immediately receives a digital euro wallet. Perhaps it's still, not operational, but it should be the birthright, with potentially some feature of getting, used to it with when you are really very young, in order to get kind of acquainted when you are then becoming more adult later in your life. So that's digital euro inclusion by default. Why would someone need to get through the KYC period when he or she is 12 years old or 10 years old? I mean, for me, this is a mystery. Why to get onboarded, you need to go through a barrier of banking sector, while actually you need to get access to public money immediately when you are born and when you are getting old enough to transact. So that would be huge added value. That would be indeed a vision of 100% inclusion, with an opt-out option perhaps, but not something that you have to, in order to get digital euro, you need to become, onboarded. So, and with these features, with these recommendations, we also believe that we should offer some basic features free of charge, as the way we do now with cash. So there are more, and I encourage you to find the paper, to find the survey results, to go through it, to understand what people actually want. And that is let's say, my belief in a potentially secure and prosperous future for Europe, for European citizens. Yeah? So I would look at this not from the today's perspective, which is of course, entangled in a multiple issues related to diverse lobby pressures and interest intersections, But from the long-term perspective, what kind of life, what kind of economic vision we have in front of our eyes for the next 20, 30, 50 years.
Thank you very much. You've brought to this debate a very important dimension, which is indeed inclusion by default, which probably only a public means of payment can achieve. And also what the digital euro can achieve is to guarantee your right of access to central bank money, even in a digitalized economy, where cash can only serve some purposes. Now, turning again to industry representatives, I would like to give the floor to Ludovic, who indeed brings the project Wero to this panel, and which is a project that is very important also for our European sovereignty. And because it has the ambition to deliver a pan-European payment means, and the road to doing that is probably not very easy. So how can the digital euro be framed so that it is not actually competing with successful national or regional solutions such as Wero, but as a European public good that actually supports them? How can we get it right in that perspective?
So, just before answering your question, let me just quickly remind everybody what we are doing at EPI and Wero. So, first of all, it's an account-to-account payment solution. So, directly from the payer account to the beneficiary account. There's nothing in the middle. And it's based on instant payment, covering all use cases, P2P, e-commerce, point of sale, and also value-added services, with also a wallet approach. So wallet approach meaning that there will be in the Wero wallet, there is already in the Wero wallet not only the Wero account-to-account payment, but also other payment means. Then today where we are live in 3 markets, so Germany, France, and Belgium, with P2P launching e-commerce next month in Germany, then Belgium. And next year we will be covering 5 markets, so we will add Netherlands and Luxembourg. And those 5 markets are representing 75% of all the value of retail payments in the euro area. So this according to ECB statistics, which is already quite good, but not enough. And of course, we are not limiting ourselves to the euro area because the objective is to expand to other markets, in the end to cover the whole SEPA region. And we do that via 2 ways. The first way is expanding Wero to new markets. We will announce certainly new markets very soon. Of course, Estonia could be one of them in the future, but we're not there yet. And we are also working on interoperability with other local solutions, so namely represented by EuroPA, the European Payment Alliance. I think you will hear in the next panel our friends from Bizum from Spain. And so the objective is to make sure that we can make Wero interoperable with other solutions which are important in their markets to cater for cross-border payments inside the EU. So this being said, so for today we have 43 million users already, 43 million enrolled users in the 3 markets. And next year it will be even more because we will also migrate existing solutions in Netherlands with Ideal, which is more than 11 million users already, and also Peconic in Luxembourg. So this is Wero today. Then what is important, answering your question, is that when you go to digital payments, you enter into a new competitive area, actually. Because today, I heard a lot this morning, yes, we will create the digital version of the Euro cash, but this is changing completely words. Because when you enter into the digital space, then you don't compete with other currencies. For example, in Europe, there is nobody paying in shops with dollar. We only pay with euro or local currencies. But then when you go to the digital space, your competitors are beginning to be Apple Pay, Google Pay, Samsung Pay, PayPal. So all American players or Asian players in the future as well, which will be much more challenging. And that's why this wallet area is really, really competitive today. So we are not competing against the same people. And then that's why we need to join forces. And so that's where we need to really be mindful of that. Because, for example, just taking an example, if you take contactless payments, NFC, today, which is the most used type of payments in shops, much more than QR code, then when you tap your phone on a payment terminal, there is only one wallet which is selected. Only one wallet, which is the one which is chosen by default by the user. And if you are not this wallet, you will never be used. So my message is to say, let's not create multiple wallets. Let's try to focus per market on one wallet champion for Europe. And let's make sure that we can integrate the different payment means in this wallet so that, for example, when you want to pay, as you said, Rainer, when you want to pay with your Wiro wallet, you will have the choice. So the consumer will have the choice to choose between account-to-account, cards, maybe, and digital euro in the future. And depending on what the merchant will accept, it will also filter the use of this wallet. So that would be, from our point of view, a smart approach.
Thank you very much for this perspective. It's not, as I said earlier, must not be an easy task to scale up to the whole EU. And in that regard, we've heard a lot today about how the digital euro can support this scaling up process. I would like also now to turn to Lars and explore another of the possible benefits of the digital euro in terms of, in particular, resilience. Do you think that the digital euro could provide an added layer of resilience and security in the payments ecosystem, even in a region that where trust in current digital solutions is already very high?
I think the short answer, someone earlier said yes, because you're distributing your eggs across many baskets, and the short answer is indeed yes. I think the more broader question, I really liked what Kadri touched upon earlier, is like what is the problem indeed that digital euro is solving? Is it resilience or is it something else? And if you really think about it, right? Let's picture 10 years from now, people are actually now using it. Okay, to solve for the problem of people actually using it, many of you are economists here, so we can think of supply and demand. Supply is pretty easy. The authorities in Europe can basically force the tech to be implemented and force the industry to pay for it or some of it as well. So getting either an API across data centers in Finland or the Alps or like whatever you want, like it's all doable. The tech exists, right? Even tamper-proof chips in your phone, like the tech exists. It's not a tech problem. It's the demand side that is a bit more interesting, because what is actually then the problem to solve? So it could be then resilience. But even if we've defined the problem to be resilience, that's not enough, okay? Because for it to really work, the clarity of the problem needs to be very high among the consumers themselves, among the users who are actually going to adopt and use the payment method. So I'll bring an example. So Wise is trying to solve, for example, the problem of hidden fees in exchange rates. Most banks, sorry if you're some of them, hide fees in the exchange rate today. Most people around the world still pay it without realizing it. A lot of people are aware of the problem. I mean, the problem is big. It's 150 billion euros of hidden fees paid by people like you and I every year, okay? The problem is very visible, measurable. Most people still haven't switched or tried an alternative to this because they don't fully realize that there is an alternative and that there is really a problem. So companies like Wise need to spend a lot of effort trying to really make the problem visible, tangible for them so that they would understand, okay, I need to do something, I need to change my behavior. Because we all know that, hey, there are too many cars out there, it's polluting the planet, it's wasting our time. But if I were to ask you, hey, please don't drive tomorrow, you're going to be like, I don't know, like I got to be there on time, you know? And it's the same with payments. Unless people feel that there's a true frustration, they will not switch, resilient or not. And Evaldis, I think, made earlier a really, really good point, right? Part of the resilience game is that enough people start to actually use this. So, if we're now talking about resilience then again, the interesting scenario is that, okay, if digital euro exists for the purpose of resilience, let's ignore the other benefits for a moment, okay? Not only does it need to be agreed that this is the problem that we're solving, not only does the solution have to then cater towards resilience, i.e. it needs to work in Finland as well as in Portugal. It needs to work online as well as offline. It needs to work on a plane. It needs to work when there's an outage. Not only that, people using the payment methods need to realize the problem when it becomes useful and that there is a solution that works when the problem arises. And someone earlier mentioned, hey, let's just throw in a day where normal payments don't work, right? So you do have to battle test it, because otherwise, unless you get that critical amount of usage, the moment when you truly need it, you don't know if it's actually going to work or if people are going to use it.
Well, this was a very, I think, rich discussion, and with many different perspectives. It is clear that the digital euro is not an answer to a single question. Perhaps if I would have to rank it in terms of the key reason for the digital euro, perhaps I would say, imagine a world where you would not at all have access to central bank money. Would that be a world that we would like, to only depend on private players for getting payment services and different shapes and forms? Isn't central bank money a way to unify, to contribute to the uniform, some uniformity, but of course there are different answers to this. We've seen a bit of this diversity in this panel, and this is, I think, healthy. Now, perhaps we can explore further regulatory aspects, because there is regulation that is on the table. There's a Commission's proposal that is being debated in the Council and at the Parliament. We've heard from it this morning. And perhaps we can deep dive into some regulatory considerations. And perhaps I will turn again to the industry and ask Ludovic, how should the digital euro be integrated into today's payment infrastructures? And do you see it reshaping your business model in the EU? How do you see that coexistence?
Yeah, so I think from a regulatory perspective, it's important that as we enter into a brand new competitive space, which is the digital payment area, it's important that we have totally fair competition. So to make sure that all the players, even public players, have the same rules as private players to play on this market. So that's one consideration, I think, important, very important from the point of view of the industry. another one is that maybe if we want to make sure that consumers have access and have more choice, also maybe because I think we are talking about a lot about the public tender on the merchant side, mandatory acceptance for merchants, but maybe also focusing on the consumer side, it would be interesting to think about what about mandating the banks to offer at European level, to offer at least one European digital solution to their consumers, to their customers. So then we also give more access to digital payments to the consumers, because it's true that in some regions there is only, let's say, international cards, and consumers that don't have any other alternative. So I'll try to I keep it short, so I will stop there.
Thank you very much. Well, yes, indeed, a level playing field is something that comes back on discussions with the co-legislators, and this is an important principle. Maybe the digital euro can also help the private solutions like Wero to be accepted at scale in the EU because of indeed the open standards that will have that will indeed mean that the merchants will have to accept payment solutions that the merchants will have to accept the digital euro and then can more easily accept payment solutions based on these common standards and the scaling up effect. And I see that Kęstutis has probably some additional insights.
Exactly. I want to react. I need to react. Like in all this call for equal treatment, public versus private, it's a little bit weird to ask for this when it comes to basic people's needs. Essentially, what is the mandate, what is the obligation of all the European institutions or the Euro system institutions in Europe? It's to supply payment means to everyone, to make sure that economic engine runs without any troubles. Now, if you take private views into account, that's a completely different mandate and completely different, let's say, worldview of actually creating profits. And that brings an issue on the table. How do you ensure what is the agency of private actors to serve all 20 plus countries or all EU countries with a fast, secure, easy to use, consumer-friendly solution, right? So there is no agency actually for private sector to act, and that brings forward the public solution. For me, it's very clear that essentially it is a little bit weird to see that public sector might fall into a regulatory freeze because private sector asks for no action, please, because we want to develop private solutions.
Yeah, but it's not the same rule anymore. So just if I can just react. It's not the same rule anymore because in this case, the public sector, so the ECB in this case, will act as a provider of a solution, a retail solution for the market, so then competing with the banks.
What is the perspective from the supervisor/overseer on this debate?
And also the Euro system. It's the first thing to say, we are doing digital euro not to compete. We are doing it to complement, to strengthen existing solutions. It was said, or Kadri asked, what is the problem we are trying to solve? In different markets, the problems are different. Mm-hmm. We have to admit it. The levels of the market are different. And it's a European project. So we have to cater for the different problems and the needs. In Estonia, the problem is we don't have a solution at the point of interaction, a point of sale at the merchant side. And the problem is that if bank services are under cyber attacks or suffer technical glitches, people cannot pay digitally. That's the problem, and we're trying to solve it. yes, true, people will need to use it on a daily basis so that digital euro can be used in such occasions. And we have to work on that, as Lars was explaining, that we need to work on that, how people start using it. But there it's also, I think, if we go to e-commerce, there are, sometimes you need to enroll into additional wallets or whatever. And I think people don't want to do it. They want only to have one wallet and use it everywhere. And then this is also what we are trying to achieve in the euro area. And it was said really nicely that don't crowd out existing private solutions. That's not the objective. We are not crowding out anyone. Also, the regulation provides the banks the option to use those private solutions if those private solutions also integrate with digital euro. That's why we are really openly discussing and engaging with the market, developing the rules so that private solutions could adjust themselves in case the digital legal tender comes, so that they can also provide digital legal tender and serve their, for instance, banks, so that the bank customers can use digital euro. And not only in those markets that they are existing today, but also in those markets where their solution is not present, but digital euro is accepted. And from that, also the providers and the banks themselves get also revenues from the merchant service charges, so you expand the market. So digital euro is not here to take away business from the banks. It is here, even I would say digital euro will bring new merchants, those which do not accept digital payments today, because card payments seem too expensive. Because there will be a cap on the merchant service charge, but that charge will be reasonable. That charge will be better for the merchant, definitely, and that charge will be also in the compensation model distributed among the parties, so that everyone gets compensated of their cost and also gets revenue at the end of the day. And all people and also merchants can rely on the digital legal tender also in cases where there are outages. And we cannot ask the private sector, the banks, to prepare themselves so that they have, I don't know, 2 or 3 different backup solutions readily available. This insurance is too costly. That's why the public sector, the network, needs to be providing these kinds of services, the digital legal tender. We do it with cash today, tomorrow in the digital age where we are actually living, we need to do it with the digital euro as well. Because the example I gave you, 1 hour disruption of digital payments actually cuts lots of revenue, which we don't consider currently so seriously, I think. And actually the merchants don't get anything from the acquiring banks or the card schemes in return. Merchants could actually say that, okay, I lost revenue, please give me a percentage. They are not. They need an alternative. Thanks.
Thank you very much, Rainer. I think these were the perfect closing remarks for this panel. There are 3 minutes and 30 seconds left, so I would like to perhaps give the floor for 1 question to keep the agenda, not to derail the agenda. If there is someone who would like to ask a question, you can do it now. Yes, please.
Marko Pahor, I was talking before as well. Maybe a question for Ludovic. What is the upside of interlinking? So what is the upside for the local solutions to interlink instead of just,
you know,
adopting the EPI solution as it is?
Well, some of these solutions have been there for quite a long time. There's also, an issue with a challenge, let's say, with branding. So when you are very well known, like a solution like Bizum in Spain is so well known from the Spanish people, it's in everyday language that it's difficult to go from one solution to another. It's not so simple. That's what we are doing in the Netherlands with Ideal. Ideal is in the top 10 brands overall in the Netherlands. It's very strong. 70% of e-commerce is going through Ideal. So we know it's a challenge to engage into this migration from one solution to another. But yeah, in the end, I strongly believe that we need to consolidate the European payment market, and we will certainly get there one way or another. But yeah, it's difficult because also from the consumer perspective, what we don't say maybe enough is that payments is really something personal. Personal finance and money is something really important for people, and you don't play with that so easily. So, habits are changing slowly, and it's also a matter of time.
Can I add something to this? I think we also mustn't forget that sometimes we have the risk of thinking too small, and the EU is not the entire world. The majority of people are outside the EU, and so whatever we build, one way or another, sooner or later, needs to work for the Japanese who are visiting Germany, for example, or for the Bulgarian who's ordering biltong from South Africa. Right? So whatever we end up building, initially we could be thinking about resilience and focusing on, against crazy neighbors wanting to come uninvited. But then down the line, ultimately, a payment is an exchange of value between two people or two entities, if you will. And if we just close ourselves up to the rest of the world, that's too short-sighted. Ultimately, by the end of the day, payments just should move between people and businesses no matter where you are. Yeah.
Well, thank you very much. 3 seconds left until the end of our panel, so I think it was actually perfect. It was very lively and candid, so thank you for that, and looking forward to the next panel.
Thank you.
Thank you, see you. Actually, as I was sitting here, then I could have given also a few minutes extra, but but it's good to be keeping ourselves within the time frames. We have been discussing about many different topics, and actually now one thing that also Lars was also mentioning is to think a little bit bigger, a little bit more into the future. And after lunch, there was also a video already a little bit showing what the innovation could be or what the market stakeholders in Europe are considering. But it's always not good to just look at the videos. It's better to ask the people involved. So we have invited here also people from Spain, from Frankfurt, also to explain on these things. So, as the moderator of the last panel, which will cover the role of the digital euro in modernizing Europe's economy, the moderator will be Chris Crespo. Please join us on stage. He's the founding partner and chief editor at the Nordic FinTech magazine, but not only. He's also the head of program of the annual Baltic FinTech Days. So he knows a lot what is going on in the field, and that's why he's the best moderator for this panel. However, as panelists, I would like to invite on stage first from Bizum, the Business Development Director, Martin Ascur-Lopez. I hope I pronounce your name. Very good. Second, the head of the FinTech Hub Lithuania, Greta Ranonyte. And third, from the European Central Bank, the lead digital euro user research and experimentation, Nico Schmidt. Yes. And last, from Revolut, the head of EU Government Affairs, Sergio Tringali. The floor is yours.
Thank you, Rainer. Well, so we've discussed at length various different aspects of the digital euro. We talked about the readiness, we talked about the resilience, we talked about the market fit. But this panel will focus on touching upon whether the digital euro can really help modernize the European economy. We're going to be talking about things like readiness for adoption, about trust, about future-proofing and using technologies like AI on the back of it. So I'm sure this is going to be quite an exciting panel. I encourage all the panelists to please interact with each other. Let's try to make this as dynamic as possible. I know already that there are some views that might not are fully aligned, so I expect to be there at least some back and forth and some debate on some opinions here. But before we start, elevator pitch, each one of you just tell me briefly who you are and what you do. Let's start over there with you, Sergio.
Hi, thanks, Chris. Good to be here. Thanks for this invitation. It's very thrilling to discuss this issue. I'm the EU Government Affairs head of the Revolut. I'm based in Brussels, covering all the issues related to the financial sector, and of course, we're also covering the digital euro project.
Thank you, Sergio. Nico.
Hi, good afternoon also to everyone from my side. So I represent user research and experimentation from the Digital Euro project. So I want to put one more or a couple of more sentences of what was just raised before on the demand side. So we have been focusing also more on the demand side. So we've been working with market participants on the Digital Euro. How can we make innovation work together with PSPs? And I'm happy to expand a bit more on that in the next points.
Thank you, Nico. Greta.
Hello, good afternoon. My name is Greta Ranonyte. I'm the head of Lithuanian FinTech Association called FinTech Hub LT. We currently unite 94 members in the country, and I'm really happy to be here representing non-bank payment service providers because we talked a lot about banks, so it's great to have FinTechs represented as well. And thank you for the invitation.
Thank you, Greta. And Martin.
Well, first of all, thanks for having us. I'm coming representing Bizum as the Business Development Director. For those who don't know about Bizum, Bizum is the Spanish mobile payment solution that banks decided to launch almost 10 years ago. And in the past 9 years, we have managed to build a strong brand, business model around payments, both for P2P and e-commerce. We're now working for POS based on NFC, also interoperability with colleagues from Portugal, Italy, and other markets like Wiro, Ludovic mentioned before, and also studying what the ecosystem for these solutions needs to have in the digital euro platform in order to make it compatible to what we're doing today. So we're excited to be here.
All right, that's great. So we've got representation from various angles of the market participants, and I would just like to start with a bit of an incendiary question, and that's directly directed to you, Nico. We have in the market solutions like stablecoins. We have instant payments. We have Bizum operating in the south of Europe. We have mobile pay operating in the Nordics, where you can send money seamlessly through a phone number. So why now? Why talk about the digital euro now? And from a technology perspective, why is this the relevant time to be talking about this?
Yeah. Thanks a lot for that question. So I think there is still a lot of room to innovate and to make people's lives easier, right? So I talked a little bit that we are working with market participants. Piero mentioned it also this morning that we will continue to work with market participants in the future to explore exactly how that can work. And I think from my perspective, it's two main things that we can improve. It's integrating payments better in the customer experience. So how can that work? I'm talking about examples where we are talking about, I have a running app that's connected to my payment app, and if my son, for example, runs 10K a week, then maybe he gets a little bonus. So this is one side of the coin, but also on the very other end, we do see room for improvements, right? So we see room for improvements for tailoring solutions really to the actual customer. So we've heard earlier from the consumer side that maybe some people actually prefer safety a little bit over convenience. So maybe some people would really like to click upon one tab, but maybe for others that doesn't feel secure enough. We talked a little bit about elderly consumers that are not onboarded already in the digital world. Maybe it feels too insecure to them to just have an app where they feel like they're not in control anymore. They feel like they're hitting a couple of buttons and maybe, some amount of their money is gone. So they want to have maybe additional security layers actually embedded in their UX, so in how they would interact with the product. So from that perspective, yes, there is a lot of innovation in payments already. Yes, there are advancements basically every day, but I think there is still a lot that we can contribute. And how can we as the ECB, or with the digital euro specifically, contribute? We believe we are here really a facilitator for the process, right? So we don't need to provide everything, but we want to provide the infrastructure that actually then PSPs, market participants, can build on that to provide additional value-generating solutions that consumers actually want to have, so that we don't have innovation for innovation's sake, but that we do it together with the consumers and with the PSPs to make sure that consumers have benefits, PSPs can get something out of it, they are part of the business model, and then we can see what we can do on the central bank level to facilitate that process.
All right, well, that's a great answer, Nico. Now, we've heard throughout the day that there's a lot of benefits to the infrastructure from a technology perspective. We even heard that this is no longer a technology discussion because the technology is there. But I think, especially in the previous panel, we heard that there's, I will rephrase it, that this is a solution looking for a problem. And as such, it would still require adoption of the users. So maybe let me start with you, Sergio. Why would the users adopt a digital euro?
That's a good question. Actually, we as Revolut, we contributed together with Bocconi University in Milan to a study that is actually addressing and trying to understand why a consumer should actually use digital euro. I mean, in whatever form we may want to imagine this digital euro to be at some point. It was interesting because, first of all, we wanted to scope this research exactly on the user part. We won't exclude that we may cover at some point also the more merchant side, but starting from the consumers, because this is what we wanted to understand. And it was interesting in the finding, because in this study, of course, we also kind of consider different types of digital euro, where it's more just a simple version, a digital version of cash, or something else. But if we take digital euro as it is, as was the original project, and as it seemed to develop, it was encouraging to see that 47% of all the responders to the survey, just to give you a little bit of the numbers, we sent it to 2 million customers in Europe across all the EU27, and we received 17,000 respondents from different age level, education, profession. So I think it also kind of make a good picture of the, we could call it average customer. And the interesting part is that 47% of these people said they would use digital euro as a means of payment together with the others. So it tells us interesting things. First of all, because there is a sort of a encouraging view towards digital euro as a means for payment, even though together with others. So once again, as we heard before in the previous panel, it's important to have also the opportunity to have different choices, not just digital euro and that's it. Mm-hmm. And at the same time, I think, and this is something I also wanted to share, we understood that a majority of them were the respondents that were in favor with the lower purchasing power. And this tells us, I think, two things. One, it's a little bit pessimistic, because it shows that we're leaving aside a part of the population that feels kind of far from the financial sector, basically. They're not having the access to all the payment methods we all have, smartphones or whatever. And the more optimistic side, which was also, I think, I liked from the previous panel, that the digital euro, if conceived in the right way, could actually be a good medium to get that level playing field we want. So in order to enable these people that outside feel to be excluded from the financial sector to actually get close and to have the chance to finally pay with this. I wanted to share, again, this findings, because I think they are pretty interesting to kind of have a picture of what customers understanding right now consider the relatively limited understanding we'll have of what the digital euro will be in the near future.
Absolutely, and with 70,000 respondents, we can say that that's definitely statistically significant. So there's something to pay attention to there. Greta, I'd like to hear your perspective as a representative of of businesses that would eventually perhaps become merchants or become enablers of the use of the digital euro? What is it that you're hearing in your ecosystem, which is probably relevant to mention that it's the ecosystem with the highest number of licensed fintechs in Europe?
I would like to be honest by sitting here on this stage. Not much is being heard in the market, especially in fintechs, about the digital euro. And I think that's part of the problem. That's why we are here and we are talking about it. As I learned actually today that it will be mandatory for banks to provide digital euro for their clients, right, as a means of payment. It is not yet mandatory for non-bank PSPs. So from our perspective, then the question is, what kind of new business models can we build on that to offer digital euro to the clients? There are many questions involved with this, and it really depends on the current business models that the companies have. It's more about incentives and how it's going to be priced, and who is going to get what kind of share of the incentive from the fintech's perspective. Let's say I've heard quite a lot of different aspects today, and I would like to come back on the demand side, if I may. I'm not sure whether we are talking why consumers would use digital euro, but do consumers actually know what digital euro is currently or what it's supposed to be? Because when I was doing research, at least for myself for this conference, I read a lot of different things. It seems that a lot of people are still thinking that it's part of cash, or it should replace cash, which today we learned it shouldn't. Cash should stay separate, and digital euro is separate from cash. Then today we heard a lot that it has to replace cards or third-party systems that we are using because of security reasons. Okay, that's fine. That is a good reason. When I was looking into the ECB's website and what kind of incentives there are for consumers, a lot of stress was also given to bank transfers, and you can use digital euro for bank transfers. And reading that from a market participant, for me, it raised some concerns. Because with the current changes that we had, with SEPA payments, with instant payments, with the availability for non-bank payment services providers to connect to Target directly as well, where we already offer those kind of fast, secure, reliable bank transfers, it seems that digital euro creates competition not only to third-party payment schemes, but also to non-bank payment service providers. So that's just a concern that I am, hearing from the market. And now coming back a little bit on creating new business models, it's about basically incentives. And after today's discussion, I would not raise question as to why we should do that, because we will either do it or we will be out of touch with the reality of what's happening, because I see that digital euro will be part of the ecosystem, and we have to build something on top of that. So I would ask the question not to why, but what can we do with digital euro and the business models that fintechs offer?
Right, so I'm picking up here perhaps a trend that there is still more education to be done to the market, both to the participants from the business perspective, merchants, as well as the end users, the citizens, right? A follow-up question on this for you, Martin. Is the digital euro, from your perspective, driving innovation? Is it based on additional innovation? Or will it just add additional red tape? And I'm saying this as a company that has managed to remove a lot of the friction in payments, especially in P2P in the south of Europe.
It's a good point, and just to come up a little bit on the educational part, so we think that at least in those markets where there are already big payment champions like Bizum in the case of Spain, we have other brands, MobilePay, you mentioned, Wero has been here. We think that probably these solutions are the ones that can really act as catalysts for the digital euro to be adopted. So we believe that this is probably the best way for users to learn about the digital euro and to adopt it. For that to happen, there needs to be this coexistence that we have been mentioning all over the session, where there can be room for business models to be applied, for the user experience that users are trusting to be applied, for the brand to remain relevant. But with that happening, we think that that can be a good catalyst. And when we come to innovation, we think that this is the point where the digital euro has probably the biggest value added to bring to the table. And in our view, it's not so much on providing peer-to-peer payments, which we believe that are more or less solved today, either through solutions like us, through interoperability with other players, or through other players like Revolut, who are doing very well. But probably on the things that the market is not covering. And in our side, we see two main values. One is the offline capabilities. This is somewhere where probably the public sector has a big role in ensuring that we have this type of capabilities, and where we believe that the private market will be glad to chip in to whatever the ECB might want to do there. And also conditional payments. This is why we have been collaborating in this experimentation phase with the ECB. We've been one of the pioneering companies, and we have to concur on the fact that today the European payment rail for de facto, which is SEPA, is basic in the sense that it doesn't allow for this type of complex transactions. And we agree that having a standard that would allow us to apply more complex business logics, payment on delivery, smart payment capabilities, could be useful also for solutions like us. But for us, this is built on top of these rules, requirements, and capabilities that need to be defined properly, as our colleagues from the previous panel were mentioning, so that the coexistence between digital euro and solutions can be effective and not in competition.
Right. And Nico, what did you say about this, perhaps this concern that exists in the market between innovation and red tape, knowing, of course, that we've heard throughout the day that there's going to be regulatory frameworks and there's all this is in the works at the moment. What efforts are being done in order to ensure that this is a seamless experience for whoever decides to adopt it at the end?
Yeah, thanks a lot for the question. And I think my colleagues also mentioned it this morning already. So there is a lot that we actually do to make sure that it's not becoming a burden for PSPs, right? But it becomes an actual opportunity. So I would say the opportunity does not only come from technical innovation or anything like that, but it comes actually from the rule book, right? It comes from the rules and the standards that can then throughout the euro area hopefully more easily be used. So, for example, I would say a digital euro that facilitates that a fintech in Tallinn can have onboarded consumers on the next day in Italy or in Spain. This is a big business opportunity, I would say, right? And these are opportunities that hopefully would then directly translate to new business models that could be implemented, which are not necessarily coming from technical innovation alone, but also from the standards and rules that we would be providing, and then that the private economy can hopefully then work on. And maybe just another remark on the other aspect that consumers don't know it. I mean, we've heard also the 67% quoted this morning earlier who already, when being confronted with the digital euro, would be willing to use it. I agree there is lots of more engagement that we have to do, right? It's not like we issue a digital euro next week, right? So I think it's still fine that consumers don't know about it yet. We still have some time to catch up, but absolutely it's necessary for consumers to pick it up, to engage more, activate them more, entertain them a bit more, and also make sure that they understand the product and then also the offering and what's getting better or easier with the digital euro for them.
I just wanted to, hearing you, I have some thoughts on that. As Mr. Piero Cipollone in the morning said, that people are much smarter than that we sometimes believe, and they know what is the difference between public and private money. Last year, unfortunately, these are unfortunate news, at least for me, last year OECD did a research in Lithuania about literacy, financial literacy and other literacy as well, and they determined that 38% of Lithuanian general public, of adults, are only at the level 1 of proficiency in literacy, meaning that they only understand simple short sentences and lists, but nothing more. I would love to believe that this is not true, but these are the results of the OECD. So maybe we are thinking that people know more than they actually do. Of course, if I was asked a question as a consumer, will I use digital euro? I would say maybe. I still don't know what it is. But I guess we, as as I'm representing payment service providers, we need to explain to the consumer what the digital euro is, and this is not. There is no privacy with it. It's not going to be cash. Of course, you will be able to pay it offline, but I will, as a PSP, I will have to do KYC, and then I will have to adhere to AML requirements still. So I will look into the transactions, yes? I'm not sure whether the consumer knows that part, and also for me as a PSP, what kind of role do I play in that regard? for example, if I am, looking into the transactions as for the AML requirements and I decide to offboard the client, where does the client give the complaint? Because digital euro must be accessible to everyone, right? But then I made a decision that maybe I have concerns in AML and I have to offboard that client. So who bears that responsibility then, and what kind of role do I play in the accessibility of digital euro for the consumers, and how do I present these kind of issues to the end user? A lot of questions.
Can I just briefly react, maybe just on one point, because yes, I mean, I would actually also go a little bit further and would also say consumers don't want to have an online retail payment product that is not including AML, but then also checks against the financing of terroristic acts, right? So I'm quite sure that this is actually in line with consumer expectations, that these are services to be provided. But then I would also go again in that direction and say, yes, you're saying you would need to conduct those checks. But consumers are also saying it's fine if banks are conducting those checks because it's building the trust in the payment system. And if you're conducting those checks, that doesn't necessarily mean that we would in the end need to see then the user data, right? So we from a consumer perspective are out of the picture there. We don't have to get access to this kind of data, and this also makes the process a little bit simpler for us because we can say from the first place, we don't need access for that. The government is, quote unquote, not influencing anything in that perspective. We don't have access, we cannot see it, we cannot link transactions to people. There's nothing of the like that we're even technically capable of. So it's actually, I think, an opportunity for us to step out of that process and then make sure that consumers build valuable relationships with their PSPs. And then maybe just a small remark on the offline, because there, in fact, we do have the opportunity to potentially, from a regulation, have lighter checks to make sure there is a little bit of additional degree of freedom and privacy that users in the end then would actually have in their daily transactions.
All right, we're talking about modernizing Europe's economy, and the following question, I would like to address it directly to you, Sergio, and also to you, Martin. When we talk about the digital euro, we've discussed today that it could level the playing field by providing an alternative rail for payments. You work directly with the market. Let's start with you, Sergio. In your perspective, how can a digital euro infrastructure perhaps provide you with more alternatives to process and execute payments?
Yeah, well, I think as I was saying before, and as also the other panelists said, it's important to provide different alternatives. If we look at the payment landscape nowadays, even if you have our apps, for instance, and if you want to use innovative system like the A2A payment, I think it's fair, and this is probably should be the way forward in general, to kind of provide different ways. So you have Wero, we're part of Wero, and we think it's a great project. We also have our own A2A. So the idea is the more we create, the more we give choices to the customer and to the merchants to actually explore different alternatives. There shouldn't be a competition. Because at the end of the day, if I just say, okay, that's my Revolut system is the best, you will get the best from security, you will get the best economic condition, it doesn't make sense, because we are in an environment, an international environment, where you have different alternatives. Maybe your counterpart actually prefers to use another system. The idea is to provide customers with a multiplicity of decisions. So this is how I think in this system, in this philosophy of the whole financial ecosystem, to have a digital euro as an additional tool that all the people, all the consumers may decide to say, okay, I want to pay this with the digital euro. So I think it has a great potential. There is, of course, the backing of the ECB that could ensure and make the consumer a little bit more trusted in this case, and say, okay, I have the ECB behind me that, of course, build trust. But, you know, from the same point, I think there are also aspects that revolves around the fact that we're finally thinking about a solution that's European. So we're trying also to give some variety when it comes to relying on the same usual international actors. So we are building a non-grown solution with the digital euro that at the end of the day, it's really pan-European and oriented and inspired by competition. So I think with the entrance of digital euro in a way of being, of course, well connected, and as Greta was saying, to trying to make sure that all the actors in the financial ecosystem could participate, could bring their expertise, their know-how, because there is also, of course, a big piece of know-how to be included in that project. Then through this and through a legislation that is actually striking a good balance, we often, especially in Brussels, we discuss this trade-off between innovation and regulation. So also there, I think the co-legislator have this big responsibility, right, to try to strike this balance between an innovation-friendly regulation and at the same time something that will really inspire a good regulation to give good standards when it comes to security, to payments, to effectiveness, in order to build something that could integrate in this wider landscape of payments.
Right. Thank you, Sergio. Martin, will the digital euro make Bizum perhaps more competitive? Or companies like Bizum?
Before we jump in, Sergio forgot to mention Bizum is also a solution that Revolut is offering, like others, like Blik. So I think it's a good example on why, when there are incentives for market players to invest in a private solution, they do. So Revolut is present in different markets, and they see appetite on, okay, so let's be part of Bizum to compete in Spain, let's be Blik to compete in Poland, or Wiro to compete in France. So I think that's an example on the potential of private market solutions. We do think that the digital euro can help speeding up some of the standardization processes that need to take place in Europe. One of them, and we've been discussing over lunch before, for instance, access to European components for payment in terminals could be sped up by the digital euro. We acknowledge that, and we support that there are conversations around having European components at the terminals for the digital euro. We are fully endorsing that. Also, as we mentioned before, on the more complex transactions that can help us take from a basic standard like SEPA to something that we can fully standardize, and that would, in fact, facilitate interoperability too. But in this point, this is where we think that beyond having this, let's say, technological level playing field, we also need to ensure that this is built under a framework of level playing field in terms of recognition of solutions and also of capabilities. So we think that it would be important that if there is widespread adoption for NFC payments for the digital euro, there are not extra barriers for private solutions to access those components. If there is a requirement for third-party providers like Apple to open up certain components, those are not only open for the digital euro, those are open also for private solutions. So if we can build a level playing field from technical capabilities for PSPs all over Europe to access, and also build a legal framework so that private players can also play in that space, we think it will help solutions like us to not so much finding the technical solutions, but speeding up the process to get there faster.
Right. Okay. And Greta, the access to the SEPA network has been critical to get companies to build the ecosystem in Lithuania, right? That's been an added plus. Now, from your perspective, as someone that is at the core of the Lithuanian ecosystem, do you think that having access to the digital euro infrastructure will also help the development of local ecosystems across Europe?
I do believe that at the end of the day, a company is interested in providing as many means of payments as possible to attract clients, because if the banks are offering many different means of payments, then of course fintechs have to as well, because then they will lose the fight of the competition fight. Of course, we need to understand the differences between banks and fintechs. Most of the fintechs are offering B2B services, so business to business, and digital euro is not part of business to business services. It's about the consumers. So I'm not sure whether it will drive innovation in that sense, as if we're talking about business to business. And of course, it's not, we are operating in Europe, but not only where the euro stands, right? We're also offering services in Poland and other countries that have national currencies. So it might, but not at the speed that we would maybe like to see the innovation going in other aspects. Or also there are some questions to be answered. In Lithuania, we have the biggest fintech subsector is of course payments, because of access through central link to SEPA payments, but we also have quite a lot of crowdfunding platforms and peer-to-peer lending platforms, where of course that are serviced by fintechs, and who lends natural persons lend the money through those platforms, right? So will they be able to lend digital euros Because at the end of the day, it's their personal money that sits at their bank account that they're giving through the platform to other persons or businesses. So will they be able to use digital euro? If yes, then there is a huge business case for fintechs as well, because we have the number of crowdfunding platforms are growing. So I think there are still some questions that might be answered already. We just don't know the answer of it, and this is it might be our problem that we are not invested too much into the topic, or maybe there is some miscommunication that hasn't reached us yet. But yes, I do believe there will be innovation. And just one part, if I may come back, of course, everything should have happened yesterday, as always. Now, especially at least in Lithuania, we have this great testing platform for digital euro, and unfortunately the digital euro is not here yet. There are quite a lot of trainings for being prepared in a crisis situation for general public happening, where people from the military are saying how we have to plan our routes of escape, how we have to bury food in that routes of escape, how we have to have cash with us, how we have to even bury the cash as well, and to the spots that is only known to us. So it's already happening. The thing that we are talking about preparing for a crisis, we are already preparing. It's just we're not talking about digital euro at all. Well, this is the time where we should be talking about digital euro with the general public.
Right, maybe just a question: is that a Baltic phenomenon that's happening right now, or do we see it in other regions like Spain or like Brussels? This preparedness, readiness.
We were out of light and electricity for one day in Spain.
That's true. That's true.
We can say that this has become a hot topic also in our case. And we were already working for some resilience mechanisms, but this has accelerated the debate on what do we need to have. So the reasons are probably different, but we are indeed also looking into that.
Yeah.
When it comes to digitalization, I mean, the Baltics make all us look like the bad scholars, because they're great in that. But maybe just a point to add on, building on what Greta just said, I think it's also important on that aspect of forward-looking when it comes to innovation, right? Because nowadays we focus on the rules, what should work, what the best digital euro version should be. But actually, especially when I discuss this with other players, so other fintechs, other banks, they're often forgetting what you can build on the platform. So as soon as you get this platform on top of the digital euro infrastructure, what are the services you could build on? Because this is where really the innovation race. So I haven't had the chance yet to have the discussion internally, but I'm pretty sure that as soon as there will be more clarity on what this will infrastructure be, all our geeks will say, oh, actually, this is something we could create on this, and this is how innovation at the end of the day comes up, and you have new services at a cheaper price with a higher standards of security and efficiency. So sometimes I think also the forward looking, as you are saying, right? So you're already studying what the digital euro could be. It's also a matter of approach, how you see things. So this could actually create and open up to new opportunities. And this is something that sometimes when discussing laws or technicalities, we tend to forget.
Yeah.
If I may very quickly, I fully agree with you. I think that this is where probably business model is key, because if you can create a platform that people and participants feel comfortable and encouraged to participate, we've lived it in Bizum, you will see all of these new use cases built on top and innovation. So we've seen it how, since the very beginning, when banks started really pushing forward Bizum, they started to ideate around new features. And one example is buy now, pay later. So now in Spain, banks do not envision building anything related buy now, pay later if it's not on top of Bizum. Why? Because it's where the users are, it's where adoption is, and because it's profitable for them. If we weren't profitable, if we didn't have that adoption, then they wouldn't be looking forward. So I think that in order to have this vision, it's key that the bases are strong so that they are motivated to look a bit ahead on time.
And thank you for that. I think that's a great segue to the next question, and that's for you, Nico. Help us understand, how is the digital euro developing as a future-proof solution on top of which you can build new technologies like AI, but also we're talking about conditional payments. Tell us a little bit more about what are the things that will be built on top of that platform that could make it even more a stronger incentive for the market to adopt it.
Thanks a lot for that. I mean, it's the perfect segue because it also allows me a bit to comment on the earlier comments. I think what's most important is that we're not doing this alone, right? So we're not sitting in the ECB ivory tower and thinking about how to innovate the market, right? So we're super happy that Revolut and also Bizum joined us in this process in the past 1.5 roughly years from when we initially launched the call for the first round of the innovation partnerships, that it's very clear from the beginning that we're going this way on exploring the innovative potential of the digital euro with market participants, with PSPs. We had IT providers in that call. We have merchant representatives in that call. So we're trying to have a very broad spectrum of interest holders in that call to make sure that we give everybody the opportunity to bring their ideas, right? So we can then engage on the ideas and then make sure to agree with them jointly on what is 1 or 2 or 3 of the important business models where we should set our focus on. So this is now what we have done in the past 1.5 years. There we focused specifically on conditional payments, right? So I mentioned the example in the beginning with a linked running app that you could have or with your customized user experience. But there's also way more. You can find this in the report that we published last week. There is focus on public transport, right? So we come from a lot of different cities here. I'm quite sure that the public transport in nearly every one of these cities looks very differently. Right? So there's very good examples on public transport working great in London, in Frankfurt. It's not that simple, just to cut it short. And so there is lots of room for innovation still that I can see. And this is also why I'm happy to get that question, because we want to engage or continue to engage with market participants in the same way. Piero mentioned it this morning. We will continue also in the next phase of the program in an initiative like that. And there we can set a focus on additional use cases next to conditional payments to make sure that the digital euro is not only in the beginning, when it's going live, coming with the potential for innovative features like conditional payments, but that also further down the road, there is always the next thing coming. There is always some value that we can add, be it agentic AI or whatever the next value generating feature for users could be. So I'm then also maybe just a second to thank the organizers from the Estonian Central Bank, because for me it's the perfect opportunity that we can create those discussions now here today, and maybe, who knows, you're applying in the next round that we're publishing soon.
Indeed, indeed. All right. I just want to get your take on one last question. I know this is a big one, so it would be great if you can give me like a 30-second answer before we open the floor for questions from the audience. We know that one of the main concerns that the market participants might have when adopting the digital euro is the privacy concern. So what would you say for people that have a concern that the European Commission or the central government could be looking into what they are spending their money into?
Yeah, maybe, so I mentioned some of the things on privacy already, right? So I think the most important thing is we don't have a reason to want to see this data, right? There is nothing that we would want to see this data. So we make sure that we don't have access to any personal data in our processing. But then there is also a second component in the context of conditional payments. It's also important to draw the distinction between programmable money and conditional payments, right? So we also want to make sure that the digital euro is not programmable money. It's not money that's programmed to be only used to buy groceries, and you cannot use it to buy alcohol or anything like that. Just to be very clear on that point, that this is not in scope of the digital euro at all, but we're only looking at conditional payments, so including conditions that upon a certain event or time, then a payment would be triggered.
Great. Okay, any last comments on that, and the last question from any of the other panelists?
I would just add to that I guess the question of privacy, now, of course, we know that the ECB will not be looking into the data and all of those things, but it's also part of trust, right? And because it's going to be distributed by mostly credit institutions, then the question is, how do consumers trust their credit institutions? According to, we did a research of general public this summer, where at least 1,000 participants answered the questions. That's not a lot, but we call it a representative research. 81% said that they trust their financial institution. Of course, it's a high number maybe compared to others, but there is still 19 persons who don't trust their financial institution. And it doesn't matter that the ECB will not look into data. If they want to access digital euro, they will have to go through the banking system. So then the question is not only whether do we trust ECB or not, but it's also do we trust our credit institutions, and what can we do as a payment service providers to increase the trust of us from the point of consumer.
All right, thank you, Greta. And with that, I think we have time for 1 or 2 questions from the audience. So I don't know if anyone wants to throw a question in here to our panelists. Yes, over here at the front.
Thank you very much, Jaakko from Finland. I would have a question in particular to Greta, but others can answer as well. I mean, to pick up what you just last said on how to build credibility for PSPs as innovative service providers to customers. So you sounded quite skeptical towards digital euro, but doesn't actually the digital euro play that role? So your members could co-brand their services with ECB. That could actually give added credibility to, especially to PSPs, and boost competition with traditional banks who have now a privileged position in the financial system.
Oh, it's so interesting that they sound skeptical. I'm not skeptical of digital euro, at least for what I understand it to be. Maybe I don't see it as another means of payment as of yet, but I see it as an alternative to card payments, and I think to be used in a crisis situation. Because for me, coming from Lithuania, crisis is at the next door, or war is actually at the next door. So we always live with that kind of, fear, maybe not fear, but just understanding that is very close. So I see digital euro as solving the problem during the crisis. So I'm not skeptical of it. I'm just I'm deciding for myself not to ask the question why. I think at this point it doesn't really matter, or maybe it's the question for the politicians to answer to themselves, to provide maybe answers later to the people. Now I'm thinking about how we can build on it, how we can build on digital euro. How can I come back to Lithuania and present digital euro to the market with all of the technical questions that they may have, because while it's an important discussion to have it right now, not a lot of market participants might be participating in the discussions. I don't know the numbers, of course, the larger ones, not sure how many small ones are participating there.
If I may add one thing, Greta was mentioning this before. So trust, of course, it's the fundamental focus here, because we really need to build trust around the system like digital euro, but the same reasoning apply also to the other payment methods. How we can make understand the consumer of today, the consumer of yesterday, and the consumer of tomorrow, that they could rely on this innovative system, is by building trust. How do we build trust? With privacy. Coming back to the previous question that Nico was saying. So actually, there are no groundbreaking innovation behind, right? I mean, there is nothing more innovative than instant payments or distributed ledger technology, blockchain. More or less, we're getting close to the same level of technology. So there is not a big technological innovation behind the system like the digital euro. But we need to show to the customers that they could actually trust on the system. Because, for instance, when it comes to privacy, there are projects like, as we said, the planned, I think it was the name by the innovation platform of the ECB, this planned transactions. So there is the anonymization of the data for the transaction through cryptography. So if we make common people understand that this means that their data will be anonymized and they will be the only ones knowing who's the transaction part, then it's already something. So you can finally explain to your neighbor that if you do this, actually those data won't go anywhere. They're just between you and the merchant. This is the type of narrative we should also, I mean, not just the ECB, but also us as participants to this ecosystem, to make them understand that this is the right version. Without even mentioning security, which is another elephant in the room, that it's also needed to build trust around such a system.
Indeed. Well, I think if I can take something from this panel, is that there is still quite a lot of work to be done in terms of communicating to the market what is the digital euro, what's the value of it, what are the benefits from it. And I think it will be really interesting to run that survey that Revolut did once this has been disseminated a little bit more, and see what's the change in the willingness to adopt a solution. But we are out of time, so thank you so much to our panelists, and thank you for a very engaging and dynamic discussion. Let's give them a big hand, please.
Thank you, Chris, and thank you all the panelists. So we are steadily reaching the end of the conference. And for concluding, I would like to invite Madis on the stage, just for a discussion. So Madis, if I would ask, what are the, I don't know, 3 key takeaways of today which you would like to emphasize?
3? Okay, I didn't know you were going to ask for 3. But I did take notes, and it's not an easy task to summarize the full day of discussions, but I can share my notes, and you can maybe complement. So first, what I'm taking home from here is that speaking of the objectives or the benefits of digital euro, I think not everyone is understanding it the same way, depending on from which angle you're looking at it. So for us as central bankers or the public authorities, I think this concept of strategic autonomy, for example, or having really a pan-European solution, it's maybe more important in our minds than it is, for example, for an average consumer. And I think we have to appreciate that. Of course, the issue of resilience that I think resonated well from different speakers. But then looking at now going just through the different groups or interested parties, we didn't talk that much about merchants. I think from a merchant's point of view, of course, resilience matters because they don't want to see interruption to their business and the sales, but also cost. So because they are the ones paying the cost for the processing of the payments, not the consumer. So it's the merchants who want to make sure that the service is provided at a reasonable cost. From the payment service providers, banks and fintechs, it seems like we still have to explain or make the case that the digital euro is also commercially a good proposition, and there's a business case also for commercial banks. And I'm not sure if we actually need to change anything, or is it a matter of explaining how it's supposed to work, or maybe there is a need to change something, but we need to have a viable business model also for the payment service providers so that they would actively be offering the digital euro to their customers. And from the point of view of fintechs, I think they are just sort of more curious at the moment what will it really mean for them and their possibilities. And then finally, the customers or the people. I realized they do appreciate the privacy as one concern that came out from these questionnaires. Resilience, I think, also is an issue to pay attention to. But then, at the end, we need to achieve a sufficient level of adoption or usage in order for all the other objectives that we're talking about really to have a meaningful impact. And I think in the panel before the last one, it was spelled out very clearly that the consumer has to get a sense that this problem that they're facing now, it's urgent enough and clear enough so that they would actually make the switch and also put those digital euros in their wallet. And I think there were a bit sort of mixed views whether it is the case already. I actually found that some of the surveys among just general public in terms of how many would be interested in using digital euro, they were in a way quite optimistic already without people really knowing much yet about what it really means, still already suggesting that they might use this as a payment option. And then I'm going to wrap up. So practically speaking, I agree with the point that it's probably a bad idea to have many competing digital wallets, but we want to have digital euro as one payment option in the digital wallet that the customer or the person is already using and that he or she is used to. And at the end, I think it was very nicely put by using the term coexistence. So we need there has to be a good model of coexistence where there's room for private sector solutions and indeed and digital euro And digital euro infrastructure could indeed facilitate competition and make it possible for private sector operators to provide new services and in that sense allow for better competition, and perhaps digital euro could help with standardization in a way and also facilitate more competition in that sense. And finally, I thought there were different, among the two members of European Parliament who were in the room, there were different views in terms of how, or I would say different levels of optimism in the sense of how easy will this debate be in the European Parliament, but I think we're hopeful that by the end of next year at least we have the legal framework in place and we can proceed faster with the project.
True. Thank you, Madis. From my side, I will just quickly, actually you covered, I think, the majority of things that I wanted to say as well from my notes. But yeah, on the last point, on the optimism or pessimism at the European Parliament level, I think, and we discussed it also during the lunch break with colleagues, I think there is, and the sensation that we got today, that there is a clear understanding and feeling that we need a digital means of payment that is under European control. A digital legal tender, so what we are trying to achieve. And true, also in the panel where I was sitting, the sensation that maybe we need to explain better what do we expect from the banks. Because in the legislation and in the rule books, all the things are there, but maybe we need to do even a better job in explaining, and vice versa also. I think the event today also makes banks realize that we need to take this seriously, because when we discuss the question if or when, it is clearly when. No? And maybe this is the triggering moment when also banks are starting to consider what do they actually need to do, how to do it in the best way so that the costs are not too large, how to benefit their users. And in general, I think also the, let's say, the problems we want to solve, as I said, in different countries they are different. And then I think from the public sector side, we see, and also looking at what is happening in the world, that the environment is ripe for digital legal tender, but we might need to do some work on the demand side so that digital euro would also be used on a daily basis, because, as said, if you don't have digital euro in your wallet, you cannot use it in a crisis, but as a payment option, you can use it also without having the digital wallet, the digital euro in your wallet. So to provide the option, the possibilities for banks to create added value to their customers and provide it as a public service without asking any fees from the Eurosystem side. So that's I think, these were my notes in addition.
Excellent. And I think for sure it was a good time to start this discussion in Estonia also, and share where we stand on that project to a wider audience. Well, it's really an international audience here, but I think it's good that we have in the Baltics more of a debate on digital euro. I'm sure it will continue, but this was just an important step on that way. So I would like to thank all of you, the speakers who shared their views, and the rest of you who were here and paid attention and asked good questions. And I'm sure we will have other future discussions similar to that. Then maybe more specific already as we're further along the way. Thank you again, and you have a good afternoon.